Bitcoin today. Not Bitcoin yesterday. This is Bitcoin today. Bitcoin today. Not Bitcoin last year. Bitcoin today. This is Bitcoin now. Get educated and let's get that education going. This is Bitcoin today. Bitcoin now. Don't look now, but Bitcoin is on fire. This thing is, you can't kill it. You have to find something that you can trust and that trustless world, which is Bitcoin. You know, it is a asset class that protects you. Right? The U.S. federal government's on unsustainable fiscal path, and the U.S. federal government's on unsustainable fiscal path. You do not sell your Bitcoin. Sell your Bitcoin. You do not sell your Bitcoin. Sell your Bitcoin. Bitcoin today. Bitcoin today. Bitcoin today. Bitcoins. Bitcoin today. Not crypto today. Bitcoin. Bitcoin today. Bitcoin today. Bitcoin today. Bitcoin today. No. Not Bitcoin today. Not today. Bitcoin, by the way. Bitcoin today. You do not sell your Bitcoin. Sell your Bitcoin. You do not sell your Bitcoin. Sell your Bitcoin. You do not sell your Bitcoin. Sell your Bitcoin. You do not sell your Bitcoin. Sell your Bitcoin. Don't look now, but Bitcoin is on fire. This thing is, you can't kill it. You have to find something that you can trust and that trust this world, which is Bitcoin. You know, it is a asset class that protects you. Right? The U.S. federal government's on unsustainable fiscal path. And the U.S. federal government's on unsustainable fiscal path.
What's up, Terrence?
Where's our crew? Is something else happening this morning? Where's everybody?
Everyone's slow getting up this morning, it looks like. I don't see there are no other spaces going on. No, there's a few.
Well, everyone will be here soon, in light of Lauren being here.
This is a true story.
I think Lauren's scaring everybody off.
I think Lauren is feeling like shit still from Las Vegas, Nevada.
He's still recovering.
Oh my God. I overdid it. Let's just say.
Honestly, how do you put that many drinks down? Like, I don't know. I don't know how that's even physically possible. I mean, I know I'm probably a lightweight when it comes to drinking, but Cosmo and I, when we were at that one sushi dinner, whatever it was, we were looking at each other going, wait, is that another one? Wait, have you been counting? I
It was impressive. It was
It was
shocking, but impressive.
impressive.
Yeah.
Sorry, I was doing my duty as a co-host and inviting speakers up to the stage. Yeah, thanks, guys. You should have seen me in my many 25 years ago when I was 30. Yeah. What's up, pink shirt guy? Fred's
Morning,
here.
guys.
Dark's
Dude,
in
you
the room.
didn't let on how bad it was. I kind of feel bad now because we were hanging out in the pool and playing poker and doing all the things, and I didn't realize you had imbibed to that degree.
I think I pretty much caught pneumonia, but hey, it was fun. So
Worth
yeah.
it. Worth it.
So worth
Worth
it.
it.
So worth it. Yeah. Dark and Fred, what's up, fellas?
What's up, brother? How you doing, man?
Did you make it? Did you make your
Uh,
long drive?
15 hours.
Oh, good Lord, I don't envy you.
Yeah, I'm a little tired. How you guys doing today?
Not too shabby. How about you, Fred?
We lost him.
Fred
Fred,
dropped off. We lost Fred.
hang on. He had to go make a sandwich. Let me bring him back up.
I like sandwiches.
You're making me hungry. It's lunchtime over here.
I need to get back on the Bitcoin path again and have a healthy shake for breakfast and no more drinks. Yeah, the last drink I had, I tried to squeeze it. I tried to max out the good times, and Pink Shirt Guy and his crew invited me for breakfast. I'm sorry I missed a couple of other events, many other events that I was supposed to go to.
You missed literally everything except
Okay, I
happy
did.
hour.
I
Literally
missed.
everything.
Got me some good happy hours in, so I'm thankful for that. No, I was. Pink invited me out the morning my plane left, and then we ended up. I had to check my bag at his hotel because my plane was leaving that afternoon, and we managed to milk a few more free drink, or well, free to me, thanks, Pink Shirt Guy, in the pool, and he had to lend me a pair of his swim trunks or suit or whatever you call them wherever you're from, so that I could have.
Speedos. We call them
Yeah,
Speedos.
okay, you're on Speedo. So he lent me a Speedo so I could enjoy some more
Pixar
moments
didn't
with his
happen.
crew. Yeah, true.
Was it a
Okay,
banana hammock?
you got it. You want pictures? You got pictures. Pink, is it okay if I post the picture, the flex, the literal flex?
Oh, dude, don't do
Okay, I
that.
won't. I won't. I'll send it in private
You can crop
DM.
me out of it and
I'll
then
put
post
a,
it.
I'll put a, the little Bitcoin logo over your face.
Yep, that's good. Do that.
Okay.
Well, once you're done talking about your bikini line, Fred Krueger will come back up because we'd like to hear from Fred, but he can't be a part of this. Hey, Jesse, how's it going?
Hey, brother. Doing good. Good morning.
So, Dark, what's on your mind? I wasn't aware. Were you running some other spaces yesterday after our morning show?
Oh no, I was driving. I just wanted I wanted to take a second and thank everybody who sent such nice messages. My DMs, were overflowing with kind words about the loss of Jeff, and I just wanted to reach out to the entire group and say thank you so much. It filled my heart with love on the drive, and yeah, we move on. I'm super busy today, so I'm not going to be able to hang out, but just thank you to the entire space. That was awesome. It's really an amazing community that rallies behind people when they're feeling down. So much love to everybody.
We
it's
love you. We
a
love you, man.
it's a big reflection of who you are, Dark. So you put it out there and then you get it back. So
I don't know about that, but this is one amazing community, and the heartfelt messages were just overflowing. I don't. Again, speechless. The community continues to leave me speechless. What a family! Amazing.
Apparently, Fred didn't like that. He left. He's here for the Bitcoin, not for the good feelings. Oh, there he is. Lauren, are you still inviting people up, or are you just? Oh, there he is.
I'm editing the picture so I can post it. So I have to put the Bitcoin logo over PSG's face. But yeah,
Yeah, I
back
was
to
gonna
Bitcoin.
post photos with us and Cosmo, but I had to get a
Nope.
helmet and stick it over his face.
Cosmo said we can post. It's just he doesn't want to be tagged. So he's right on the. He's got 1 foot out the door, but he doesn't want to go ahead and come out of the closet yet.
So here's a photo of 6 people. 5 people are tagged. One isn't. Who
Guess
is
who it
that?
is? Yeah, exactly.
It'll be a mystery. It'll just be a mystery for everyone.
Hey, Rusty Titty, what's going on?
Hey
Please refer
guys.
to him just as Rustity. It just sounds less offensive. Rustity.
Y'all crack me up, man. No, I am super jealous that y'all got to hang out. I know we'll cross paths soon enough. But I just want to be real quick. Hey, Dart, that's a message and condolences. And I also, when you get a chance, I know he's not your favorite, but the Bitbon thing came up, and I want you to. Kind of look at some material. I'm kind of curious your thoughts too. Um, just when you get a chance in your DM. I know you're busy and it's not front of mind, but uh, anyway, I know it's gaining traction, so I just sent you some material. So that's all I wanted to say. Thanks, guys.
Hey, so Cosmo, do you want to talk about or put your
Yeah, let's
post
do
in the
it.
nest? Because Cosmo released a post yesterday that blew up. And it's not normally my subject, but there was a lot of interest around it, which tells me people are thinking about it. And maybe you can post it in the nest, but also just give us a brief summary of what you're thinking, why you posed that question, and what's the hive mind thinking?
Yeah, so for me, like everyone who's familiar with things that I posted and said, I'm not a big fan of leverage. I'm genuinely not a big fan of like I mean, this isn't even getting over your skis, but I don't like the idea of being in debt or anything like that. But I was thinking the other day, I'm like, look, if I'm like all in on this, what is the appropriate allocation to Bitcoin, right? So is it 40%? Is it 60%? Is it 90%? Is it 100%? Is it 1,000%? Like that's like the real question you have to ask yourself. And if you can safely, buy Bitcoin with somebody else's money and run this play that, that Sailor's doing, that a lot of people have done in the past, then really, if you're 100% in, why aren't you 120% in? Like going over that line, if you can do it safely, like why wouldn't you do something like that? And it was interesting because I was thinking about back in 2021 in March, kind of near the top when Sailor got on like a podcast or something. He's like, "Look, like mortgage your house and buy Bitcoin, right?" And it was at the top, and as it was going down, he got clowned for that a lot by a lot of the finance guys on here, like the FinTwit guys. But after another 40 years, everybody who did that is sitting on a 3% mortgage with, you know, 5 plus extra Bitcoin or however many they were able to buy at that point. And the payments are so small because the interest rates were so low. So I was just thinking, I'm like, okay, what's stopping me from doing something like that? And my credit score is pretty good. And I was looking around and I could get, something around 100 grand. And the thought was, okay, how can you make this like as hands off as possible? And my thought was like, you take out 100 grand, you buy 75K in Bitcoin, then you put 25K in MSTY, and ideally, in the ideal scenario, the dividends pay your monthly payments. And if you kind of have to make up for some discrepancies here and there, that's fine. You can do that with income. But if this plan works, even for the next year, like in what world is this a bad idea, especially because like in the worst case scenario, right? And there was a lot of conversation about this in the comments. There's like 500 people that commented. In the worst case scenario, you just have to make sure you pay the debt. There's nothing margined here, so I'm not going to get called on anything. So yeah, I'm curious to see what you guys think. The comments at the beginning, you'll notice like the comments that came early on from people that follow me or that I follow, they're relatively intelligent. Like there's some good conversation, and then it kind of devolved into it. The algorithm took it to the rest of Twitter, and it was just an absolute disaster. So there's some idiots in there, but yeah, I'm curious what you guys thought.
So, real quick to set the stage, and then I see Fred and Rusty have their hands up. It's in the simplest of terms, if you look at Bitcoin over the last 10 years, we've had an 82% average CAGR. I actually think it's 84% as of today. Now, some of that captures going back to 2015, right? So you're looking at, the law of small numbers, and so maybe some of that we won't have again in the future. So just go back 5 years, you're still over a 60% CAGR. So just on a nominal term, forget about how well you sleep at night and your mental capacity. If you can borrow anything under that and have 60%, if you can make 60% but be spending 10 or 15%, right, that arbitrage is definitely helpful. On the other hand, like, are you viewing this just as a trade to go back into dollars? If you're all in on Bitcoin, some people want to do more things with their Bitcoin. I don't think there's anything wrong with that. But anyway, so getting back to where you are, but I just wanted to set for people, just what the accretion rate of Bitcoin has been. And I don't know if that's going to diminish somewhat in the future. Fred would know a lot more about that than me, but I would think that it's going to at least stay above 30 or 40 for quite some time. Fred, do you want to jump in just because we heard from
Yeah,
Rusty
yeah. So
Titty?
I think that the long term trend, from the power law is above 30, right? So, you can argue whether we're going to do 50 or 30 or even 20, but look, these are really big numbers, and I do think it's probably a smart move, and to take out as much equity as you can from your house right now, and in whatever way you can do it. I do think that you're going to be paid to do that. The only thing right now is that interest rates are high, but I still don't think at in the bigger scheme of things, whether you're borrowing at 7% or 3%, doesn't matter as much as the CAGR of Bitcoin. That's the big thing. And the only thing I will say against it is if you've got a wife or a partner and you're in this thing, you better make sure that she's aligned with you, because I just see a lot of marriages kind of going wrong because the guy said, "Trust me, honey," and then the wife is not as orange pilled as the husband, and it's like, oh my God, you mortgaged our future, and our little Johnny is his homestead, and so I think it's easier if you're a solo guy, but if you're kind of like most of us, married, and you have to make those financial decisions jointly, that could play into the equation.
I appreciate
Lauren says you
the
don't
marriage
need to talk
caveat.
to the wife. Yeah,
Yeah.
he 5 times he said it. You don't need to talk to your wife. What are you talking about?
Wife? Schmife. Yeah.
Yeah,
No,
there's
I sorry, this really hits close to home, but definitely appreciate the marriage caveat in there. There's probably other circumstances depending on, where you're at in life, people on fixed incomes and whatnot, if we do take that turn for the south for a period of time, the ability to actually cover, your expenses and pay that would I don't think it's for everyone, but I definitely appreciate the enthusiasm. Let's
Yeah,
go
well, really quick, I think that's the big
ESG after
caveat,
you,
right?
Cosmo.
Yeah,
Yeah.
that's the big caveat, right? And a lot of people were like, oh, like, the returns on MSTY aren't for sure. And I'm like, yeah, I mean, that's a great point. And ideally, you set up a situation where you literally take out the loan and it doesn't affect your life whatsoever, right? But, if there is some sort of downturn and those payouts don't pay if you can kind of supplement that with your income, if that's possible, I still don't see how this is a losing strategy over a long enough time, like and it makes me uncomfortable. That's the thing, is when I post it, you'll notice it's like, why shouldn't I do this? Because I don't like this, to be honest. I don't like these strategy. I don't play those kinds of games, but I genuinely can't think of a good reason not to.
Hey,
So
Cosmo, and in
yeah.
actuality, the fiat system is quite a joke. Somebody who's gone through bankruptcy in my 40s, I mean, that's actually a worst case scenario, and that's really not that bad. Because I would even, this isn't financial advice, but let's just say one can keep their Bitcoin if it is accumulated and stored properly, and even go through a
Might want to
traumatic
not
event
say that
like
public,
bankruptcy. So
Lauren. Just for
no,
your
no, no.
info.
I didn't say it personally. I'm just
Hey,
saying
This is for
theoretically and
entertainment purposes
hypothetically.
hey,
only.
Yeah,
it's
All
yeah,
of this is for
yeah,
entertainment
Cosmonaut.
purposes
so
only.
Why did you need? I don't understand why you needed 25%, Misty, though, because that would be like $2,000 to $3,000. But your loan payment, what rate are you getting? It should not be
Yeah,
more than
no,
like a.
I no,
It
I
should only be
the
like a
rate's
thousand
good.
dollars, right?
I
Max.
put that number in because I'm being conservative, right? So the idea is that, like, and the point of this loan is not to, I want like to set it up so it's the least amount of
Is this
burden
home
on me as
equity?
possible,
Is
right?
this home equity? HELOC?
No, no,
Hey,
no, it's
can
not.
somebody
It's
put a
personal loan.
muzzle on?
So wait, real quick, Asteroid. Sorry, we've got a lot of hands
Yeah,
up.
Yeah.
But while we're still on Fred, I just want to ask, because I know Fred has researched this, and I think he's even building his own platform. So, Fred, if someone were to do what Cosmo's suggesting, and they wanted to use Bitcoin as their collateral because that's how they would borrow, are you seeing any platforms or apps that you feel are
Well,
following best practices?
look, there's plenty. Yes, there are. Okay, so plenty. I think the biggest issue is you want there is short-term lending and long-term lending, right? I think there's plenty of ways you can borrow against your Bitcoin right now, and I think you're right. Ben and I are building one. We have one, and if you want to borrow, now we don't have tons of liquidity on it yet, but there's some. I'm about to put in a couple hundred grand of tether in today or tomorrow. But it's if you want to borrow, um, if you want to borrow, you can't borrow over a year, right? So that's why I think the Savannah product could be interesting because it's a long-term product, right? So if you want to go into long-term debt versus your house, that in many cases that's what you want to do. If you want to just say, I want to borrow against my Bitcoin, and I'm not going to lock in the rate for 10 years. I'm just going to lock it in for a month or just even a day, right? There's a lot of ways to do it, and I feel like, yeah, there's, like if you the worst case is, let's say you go, I'm going to put my Bitcoin in wrap Bitcoin on Aave, and I know DarkSide's done this. You could do that. You're not going to lose your Bitcoin. I mean, you might have a tax consequence of doing that, but you can borrow relatively cheap. And again, I wouldn't worry too much about whether it's 5%, 7%. I would be concerned at 15% from Unchained Capital. So I think the rate is relevant here. I think borrowing at 15% is, it sort of changes the equation, in my opinion. So I'm sort of
So if
anti
you
that.
want to,
Yeah, I'm anti the fifth. I will not pay 15% even for Bitcoin. I wouldn't do that. But maybe other
but
people
so if you
on this
want,
call might do it. I don't know.
yeah, and I mean, I get why. Like at those percentages, there's like zero rehypothecation, and you have proof of reserves and whatnot, and
Well, you can
typically
get
down in the
zero. Look, I mean, again, you can get the zero rehypothecation proof of reserve. That you can get. Okay. The question is,
at 5, 6, 7%.
yeah, Anave you can, right? Because Anave, it's again, but the problem there is it's wrapped Bitcoin. So you're gonna have that's why I'm saying this space is not ideal thing to discuss that, because there's so many issues, right? If you're dealing with wrapped Bitcoin, in addition to the fact that the wrapping may be suspect, right? I don't think it is for WBTC that's backed by BitGo, etc. It's on Ethereum, but you don't care because you're basically just using it as collateral. You're going to get it in and out. The big problem there is just all in cost. It's probably going to cost you 2% wrapping and unwrapping it. That's number one. And number two is you're going to have a tax consequence if the IRS audits you. They're going to say, you exchanged your Bitcoin for wrapped Bitcoin. That's a taxable event. I'm sorry, sir. Did you pay? Did you declare that? And do you pay your tax on it? Because you should have. And so, I think that's the biggest issue. I think you want it to be a non-taxable event, right? And you want it to be under double digits. That's what I think. I think that if I'm borrowing a lot, that's what I want. I'm not borrowing a lot because I got a lot of Bitcoin. I'm more on the opposite side. I'm more a lender than a borrower. So but I wouldn't borrow at 15%. That I just wouldn't do that. And I do think you can borrow at about 10%. And Strike's doing it at 12, I think. I'm not sure
They're
where
at
they
9.5,
nine
but
and a
they're just
half.
not in
Okay, well
California where
that
we are.
yeah.
Yeah.
Look, okay, so again, this is a really complicated issue. It's, do you want to do KYC? Is that something that interests you or not? Because personally, I wouldn't, as a Bitcoiner, I really wouldn't want to have somebody else have my home address and to have my KYC and a whole bunch of Bitcoin. I really don't love that idea. You know what I mean? Um,
Well, and the funny
so
thing too is where we're at right now is you can get an unsecured personal loan at better rates than you can get, collateralized Bitcoin. And what
That's
that
where I
what
was gonna go, Connor.
yeah, what that does too is then you can't get, if Bitcoin, if we hit that bear, right? So let's say you were to do something like that right now and then we hit the bear, you could get margin called if it's, if you're using your Bitcoin as collateral. But if you can get an unsecured personal loan for a better rate without having to get called. And you
so for how much? How
Yeah.
much
So
can you do it
can
for?
I speak to
Well,
this though
that's
real
the
quick?
point I'm trying to make is that like, and like you said earlier, Fred, right? The difference between 7 or 9% with Strike for a collateralized, and let's say you could even get this, you had to get this loan at like 13% that's unsecured personal loan. That would even be a better situation there. As long as you can make those payments, you're good, right?
Yeah, but see what I'm talking about is for the Bitcoiners who are, maybe they're unemployed, maybe they have bad
Gotcha.
credit, outside the fiat system. And because there's so many products, there's like 20 to 30 of these companies, and it's like Lava and Abra and Debify and Ledin and Salt, and like it's unending, and they're all different. Some have oracles, some don't. Some are complete proof of reserves. Some are like these DAOs. Some, like Fred said, are wrapped, in which case you do technically have a tax consequence unless it's like through Coinbase where you don't have to worry about the wrapped. That's just what they are doing through
But guys,
Morpho.
also there's like, I don't know who's been on this call who had money with Celsius or BlockFi or anything. Okay, has anybody?
I did, and
Yeah,
Puncher
I did
did.
too.
Okay,
I had BlockFi.
and I did. Okay, so I'll just full transparency. Okay, I had a substantial amount of Bitcoin on Celsius. Okay, several hundred Bitcoin. Okay, on Celsius, not my entire stash, but several hundred Bitcoin on Celsius. And they changed their terms of service, and they were like, we're going to change our terms of service. I read the terms of service. Okay, and I was like, holy shit, they're asking me to basically say that it's now their Bitcoin. And I pulled my Bitcoin. It was very scary to do because I thought, okay, I'm just going to leave this particular Bitcoin in Celsius. And boy, am I glad I did it. Yeah.
And you avoided the clawback, right,
And I
Fred?
avoided it, but I did it almost a year before the clawback, right? But some of my peeps, my friends, didn't. Okay, they got in, and I was like, "You got to get your money off Celsius. You got to get your money off Celsius." I have a very close friend at 50 Bitcoin on Celsius. Then he got the clawback thing, and then he was like, "Okay, fuck, man, I'm gonna lose. I have to pay it." And he lost 10 Bitcoin on Celsius. Okay, 10 Bitcoin for the clawback. And I talked to all these lawyers, and they were like, they're offering you this, man, you should just take it. So, my view on these, anything that requires a counterpart where you're signing a document, I have like no faith. You know what I mean? Zero. I have zero. Like, that's just like, I will not do that because I don't trust dealing with somebody else holding my Bitcoin. I trust
Yeah.
I trust a network holding my Bitcoin much more than I trust an individual or a company. Now, Bill Barheit is I like him. He's a
Abra.
nice guy. Abra,
Yeah.
it's a but Bill had this thing at the same time. Celsius and BlockFi and everybody imploded, and Bill didn't implode. Okay, for whatever reasons, right? He was doing a lot of the same thing, but he didn't implode. Okay.
You're also
But
talking about the lending side, right? Like we're now talking about the borrowing side.
yeah, but I'm just saying the borrowing side, you can borrow from Bill. You can do it right now, right? And he'll give you a really great teaser rate.
Yeah, he's got like 6% rates, I think,
Yeah,
with like a
he'll
one
give
and a
you
half
some.
percent origination.
My point is uh, he'll give you a good rate, but he'll give you no transparency as to what happens with your Bitcoin. Zero, right? And listen, I was at the beginning, I was even talking to Mashinsky before I invested, and I was like, okay, Alex, I'm considering putting some Bitcoin with you. And I said, you got to give me some transparency on to what you're doing with this. And he was like, Fred, I can't. It's proprietary. It's like if we told you what we're doing, everybody would copy us. So, and I remember talking to
And now
Bill,
he's in prison.
and now he's in prison. And I had the same conversation with Bill, and I'm like, Bill, look, I'm considering, I'm like, I got burned by Mashinsky. Well, I didn't get burned because I escaped, right? But like, even the way I got out was very scary. Like, they were like, they weren't just like click, submit, get your money. It was like click, submit, send a support ticket. You know what I mean? Like, do you really want your money out? Maybe we can talk you into keeping your money. It really felt like terminating an AT&T call. So I don't know. Like, I just have some past experience with these kind of systems, and my view is I want something that's completely automated where there's a system holding this thing together. And that's why I like Aave. I got to tell you, I like it. But the thing I don't like about it is I don't like the wrap Bitcoin part of it because I just know it'll be taxable. So,
Well, it sounds like you'd probably like something like Lava, Fred, or
well, here's
probably
the
what you're
problem with
building.
Lava. I'll tell you what the problem with Lava is because I looked at it and I've watched it, and Ben and I actually played around with it considerably. And I'll tell you what the problem with it is. It's the oracles. You know what they're doing with the oracles? It's a centralized oracle run by Lava. So
Yeah, they
they're
have to make the decisions, right? Yeah, these
It's
guys. Yep.
one company that's making the decision. Okay, so now that's a problem, right? And the liquidation part of that is completely opaque, right? So it's sort of like we'll determine if you're liquidated, and we'll determine how we liquidate you. Okay.
Well, get more liquidity, Fred, and build your
Yeah, no,
platform
no.
then,
Look, we
because
will.
you'll
Look,
get a lot of business.
we look. We've got already our look. We put 120 grand. It's all gone right now. It's almost all gone. Right. So we know there's massive borrowing. What we need to do now is we need to look at this same problem from the lender's perspective, right? Which is, what does a lender look at? Okay, well, a lender is going to look at the problem exactly reverse of you. They're going to say, okay, is my collateral completely segregated? Because I don't want my collateral commingled, just like you, the borrower, don't want your collateral commingled. Okay, that's number one. Number two is, you know, I may not be a 9% lender. I may be a 11% lender. Okay, so can I name my lending price, right? And so the thing about Libre is it's a two-way market, right? So it's fundamentally different from a one-way market with, with some opaque lending agreement, by some, real estate or other lending thing. It's a two-way market like Aave. So somebody's got Tether can come in and so I'm very confident that as time goes and we can see that there's all this demand for this stuff, we can also get the lending side and we can find people. There's $200 billion of Tether that's kind of earning zero interest. So there should be a fair amount of that who wants to earn 10% interest, let's just say, right?
Well, yeah, you look at all the fixed income people, and now you have something that's perfect collateral.
Right.
There's
Look, it's great collateral. It's 200% backed collateral on average, right? And
we're gonna laugh one day that interest rates were higher than U.S. Treasuries, and mortgages. Like Bitcoin
it should be
loans
the
should be
best.
less.
100% agree, right? This is great collateral. It's over collateralized, and you can lock it in for a month or 3 months. It's fantastic. Like should be great. So there's this great book. I don't want to talk too much, but like there's this great book called The Heart about. It's called Cold Start, and it's written by an Andreessen Horowitz guy. I forget the guy's name. Steve Chen, I think, right? And he wrote this great book called Cold Start, and he talks about how Uber and Tinder and all these other two-way marketplaces start. And there's always a hard side to a market. Like in Uber, there's the drivers and there's the passengers. Well, everybody wants to take an Uber, but actually the hard problem is getting the drivers, right? So the drivers are hard. And if you don't have the passengers, then the driver.
I think we lost you, Fred.
In this,
Oh, there you are.
yeah. So in this case, the hard part is the lenders. So that's the hardest part. We have to figure out how we can get lenders, and if we can get lenders, I think we can get Bitcoiners to borrow against the lenders. So that's kind of where we are. I'm gonna
Yeah,
hop off here.
100%. Thank you, Fred. Okay, we've got a lot of hands here, so thank you for being patient. I think it was Rusty, Jesse, Pink, and then Thomas.
Yeah, so and I want to talk about this because I've been in lending and credit strategy for a long time, and the thing is when people are talking about putting up their Bitcoin, what concerns me is they could get an unsecured loan. And typically in lending, you're going to get a 10% or 20% on your gross annual income. And I'm talking about people who are actually having a job right now. And if you're getting 100,000, that's awesome, Cosmo. Cool. But just to give everyone in the audience an idea, a $10,000 unsecured, meaning they're not going to get your Bitcoin. They have no rights to get anything of you other than your credit score at, say, a 10% rate for 5 years, which is pretty typical, would be $212 monthly payment. Now, all you got to do to overcome that on your investment of that $10,000 into Bitcoin is overcome a CAGR in 5 years of roughly 10%. Okay, a little bit more. That's it. And we know it's going to happen. So you can then take the multiple and do 100,000 and say it'd be around 2,000 plus, right? In a monthly payment. That first and foremost should go, okay, well, that's unsecured. Now, how does that compare to Bitcoin loans? Well, it's still the same thing because things like, right, where you're not going to pay until the time is up or when you're ready, you're still having to pay that back some way, shape, or form, whatever rate you're getting. My thing I keep saying is There are CD secured loans. You go into a bank, you can get a CD secured loan. What that does is it locks you in, and the rate is going to be astronomically low. Your credit can be garbage. Why? Because it's deposit based. And so it's locked in too. This is where I see some of these products missing the mark. If they can say, you know what, regardless of what the LTV is, we're going to lock you in, and then we're going to put a time on this loan, and then you're going to take it out, and that's what that's going to be. If they can lock you in instead of doing this, well, I lent it to you for just a little bit, and now you've already paid it all back because you got whatever return. That's where they're missing this mark, in my opinion, on bringing these Bitcoin backed collateralized loans in play. And if you want to do a HELOC, again, it's even better because it's interest only for 10 and then a 10-year payback period. Same thing, you're at a lower rate, but you've now put your equity up. And that's kind of the thing with that other product you're talking about. I think they're all great. I think the lenders are wrong. And the biggest problem they're having, because I was talking to Ledin the other day, they came on a call and they were saying that their problem is they're unsure about the regulatory environment. And I think that's going to be the case. But I see they're missing the mark between just going, well, give us some Bitcoin to back this and we'll just let you pay back whenever you want. Or, it's a high interest rate. The thing is you got to figure out that happy medium. And I think locking people in for a time frame will give them incentive enough to give you a better rate at a lower rate, right? And like you say, Tether and all this other things are sitting out there waiting to be used. I just don't think the structures are right, in my opinion. I think that's what's holding everything back. But for anyone looking to do this, in my opinion, you can look at the Kager, you can look at an actual just unsecured loan. Go unsecured well before, because Lauren said you go bankrupt. Guess what happens in a bankruptcy? Guess what happens when you default on an unsecured loan? Nothing. I can assure you this. I have dealt with it numerous times. We have nothing on you. You cannot take one thing from them. It's the bank's fault for giving you the loan. So that's what I wanted to say to
Yeah,
that.
got it. Thanks, Rusty. Yeah, you're assuming that Bitcoiners have jobs and houses, but Bitcoiners just sit on the couch. Well, they don't even have a couch, so that's the problem. So that's why we want these Bitcoin-backed loans. JT, I'm not sure if your hand is still up. If not, we'll go to Pink Shirt. Are you up, JT?
No, you guys, it's cool. Everything I had was kind of covered. So go ahead, Pink.
Okay.
Yeah, I was just going to say I've been running a HELOC strategy since about 2009, and it just became really clear to me. I was telling this to Cosmo yesterday. We were having a chat. I built 3 different houses, and in doing the build myself, I was able to save some money and create some equity each time. And so by the time I did the third house, it was just implied that all the equity I had created from the first one and the second one would just automatically go into the third house. And I had this argument with my business partners. It was like, well, I should hold some back. And they're like, yeah, that's fine. So, well, what if I decide to do that later, though? I can put all the money into the house, into the mortgage on Wednesday, and if I decide to pull some of that back out a month later, am I leveraging? They're like, yeah, you're leveraging. I'm going, no, I wasn't leveraging. It was my decision to put that equity in there to begin with. So all I'm doing is reversing a decision I made prior, because my equity is my equity anywhere I choose to put it. And so I wouldn't even, like, I've got significant Bitcoin backed loans at double digit rates, non rehypothecated. That's kind of the edge of the risk curve for me. But I would never do that before I would go look at any other available equity, whether that's in your home or in your couches or in your chairs or the bottles and cans sitting on your back deck, to try to find the best place for the equity, which is probably in Bitcoin or in some Bitcoin proxy. So to me, it all comes down to risk management. The strategy has worked flawlessly for me because my income allows me to service debt. And the debt that I'm servicing on a monthly basis effectively is as if I was paying rent and DCAing into Bitcoin at exactly the same time at a cost that I can afford. And I rode that all the way down. When Bitcoin went to 15K, I slept like a baby because that had been stress tested already. So by taking the equity from my home, again, this is not financial advice, this is a conceptual idea. But by taking the equity that existed in my underperforming bond fund called my house and moving it into Bitcoin, I get to outpace based on the kegger that we talked about. And the cost of doing that is a smaller monthly payment than what I was prepared to DCA to begin with. So it's about risk management. It's about what are the tax consequences on disposition, right? The wrap Bitcoin is a real thing. You have to be paying attention to that. What's the time horizon that I'm doing this over? Because if I'm doing it for 2 weeks, is not the same as saying, I want to own Bitcoin in 10 years. And then of course interest rate fluctuations. Like rates were going up while I was doing this. Bitcoin was tanking, but the risks that were there, I had understood them and managed them to the place where at the extremes I was still going to be okay. And so this is a real passionate subject area for me, because I really think that people follow the status quo so much when it comes to like pay off your house or allocate this to there. And Bitcoiners are really good at being critical thinkers, and so let's just think critically and see what makes mathematical sense. Manage your risks. It's a loaded gun, but in the hands of a skilled marksman, a loaded gun is a very, very powerful tool. So happy to have conversations with anybody and everybody offline regarding what some of the edges of those risks are. But it is very doable. And Cosmo, in your situation specifically with 100K, I would just say look at other opportunities other than Misty for that 25%. If you get an uncorrelated dividend paying fund, like there's TradFi stuff out there that'll pay you an 11% dividend and leave you just about even on paying the dividend. So on a 50-50 split, you're probably covering most of that monthly payment just from an uncorrelated dividend paying mutual fund or liquid alternatives fund.
Interesting. Yeah. And for those who don't follow Pink Shirt Guy, you should. I feel like from our short conversation, starting our conversation, he's a really smart guy. But I think that's the one thing that I've struggled to come to terms with, and I'm still struggling to come to terms with. It's an unfortunate reality, but the reality is in 2025, um, the way the fiat is going, debt is kind of an asset, depending on what kind of rates you can get. When you compare it to Bitcoin, it's unfortunate and it's uncomfortable, but man, I mean, it's hard to argue with the math. But let's see. I think Thomas was next.
Yeah, Tommy boy.
Yeah. So we've been rolling around this issue a lot, and Cosmo really tapped into uh, uh, a desire for the market to really tap this issue. And really, what you're arbitraging is the CAGR of the underlying asset that we all know and love of Bitcoin and the cost of money, right? So the money could be 15% on Unchained. It could be a personal loan at 11%. It could be a HELOC at 7% or 5%. Where I think you can de-risk this arbitrage is to not use the underlying asset that you're buying, in this case Bitcoin, as the collateral. So you de-risk it that way, so you avoid sort of the margin calls. So I took Cosmo's number and just ran just for shits and giggles, right? So you take a $1 million house and find somebody who's got a decent amount of equity. You got to have where you have a lot of equity. Like, so say you have $300,000 left on $1 million, so you have 700,000 tied up. That, what's real estate going to perform at? Probably under 10% for 5 years. But let's just say let's say it's going to perform at say 7 or 8%. Then it really depends on what market you're in. That 700,000 that's sitting there is underperforming relative to Bitcoin. If you took an LTV HELOC and never go up, just don't even be conservative, only go to 70% LTV. You've got $400,000 that's sitting there you could pull out and apply this strategy. Now, what's interesting is if you take a 75-25 split that Cosmo laid out in his post that got such attention, and you just put in some numbers and assume that you with a 25-75 split, it's just using Misty against Bitcoin. You could not only pay back the HELOC, you could pay back your mortgage and go to a zero cash flow position. Now, Misty's yielding over 100%. How long will that last? Well, if Bitcoin's going to go up and MSTR is going up, I suspect it'll last for at least a year, maybe more. But use something like a 75% yield on Misty. you're going to see $75,000 if you put that number. I'll put a spreadsheet out. I'll post it out. I'll put it in Cosmos thread and let people take a look at it. But I think you can see a situation where, what was underlying Cosmos' thesis was that you have uh, trapped capital in the form of equity or your borrowing capacity as an individual with a high credit score, uh, that you could, as a Bitcoiner, be converting into incremental Bitcoin uh, if you do it right. Now, if you don't believe in the premise that Bitcoin's going up and going up significantly for the next few years, then certainly don't do this. That doesn't make any sense. But if you believe it's going up, you don't want to sit on the sidelines and watch it go up and say, I haven't used all the tools that are at my disposal to maximize my return. If I can pick up another 2 or 3 or 5 Bitcoin in my portfolio, based on doing one of these strategies, that 2, 3, or 5 Bitcoin, it could be worth a significant amount of money in 10 years. And, uh, uh, and probably worth the effort to do the analysis. Everyone's situation is different. And you got to figure it out for yourself. But I just, I think it's a good strategy. I think we're going to see lots of products. There's going to be lots of competition here coming in the next year. Uh, Cosmo really tapped into what I think is a lot of demand for products like this. People want to go do this. We've all heard the great stories of guys. I heard a guy put $30,000 into Misty last year, and because he was going to buy a truck with that same money, and not only does he still have the money, the 30,000, the dividend not only paid for the truck, it paid for the insurance and the gas and then some. So people look at that, even though you may argue it's suboptimal, like you can come up with a math scenario where if you did it yourself, you'd be better off. That may be true, but you can't argue with the simplicity. And 90% of the people in the market don't want to be bothered and look at Bitcoin every 15 minutes and be on top of this. They just want a simple solution. And this really offers that. And I think people are going to gravitate to these new products that are going to come out that solve real world problems around cash flow.
Yeah, and the one point I want to make that you chimed in on there, Thomas, and that I was talking to Pink Shirt Guy last night is that everyone kind of has their DCA, or people have this once a week or once a day or once a month they're throwing it in there, and I think we don't realize that the greatest asset we have in Bitcoin is time, right? Because here in a year, 3 years, 4 years, your purchasing power of your ability to acquire Bitcoin goes down significantly, right? So if your DCA, instead of buying Bitcoin, can be moved to servicing debt that you've used to buy Bitcoin in the past, right? The leverage that you have on each dollar that you spend on your DCA goes way up, right? Like imagine like these last few years, if you're DCAing, let's say like, I don't know, just a simple term, like $1,000 a month, you're getting significantly less than if you had, if you are servicing a loan that you got 2 years ago to buy a significant amount of Bitcoin, right? So, yeah, I'm just like mentally running through this math, and yeah, it's interesting. But I think we have a
You're,
few more. Yeah, go ahead.
you're arguing pulling it forward, and I would just say you could DCA. Now, if your plan is to DCA over the next 3 years, if you have the ability to convert that DCA into a smash buy now, and then service the debt in doing that, if you have the belief that that's going up, uh, you're better off. Like let's just say in our mind, we think that we'll end the year, the first quarter 26, Bitcoin's at 200,000, and you're still doing the DCA. I'd rather buy it today, service the debt, and pulling it forward, and then ride that out. Now, again, you have to believe in this as a premise. If you don't believe we're going up and going up a lot, then don't consider any of this stuff. But what you don't want to do is sit on the sidelines and not put the tools that you have at your fingertips to work and arbitrage this issue. Not everyone's risk tolerance is different. Everyone's ability to earn income is different. So it's not a one size fits all. It's simply the purpose of this conversation is to educate people on the tools that they need to think it through and do their own analysis. I think it's very unconventional. It runs against conventional wisdom. But if you are a Bitcoin maximalist or a first or whatever term you want to use, We're sitting here with at $105,000. I would say if we polled everybody on this panel, we'd say in 1 year we'll be higher. How much higher? 140,000, maybe 200,000. I don't know what it's going to be. I just have a strong belief, and I think everybody up here does have that same strong belief that we'll be higher in the future. So if you believe that, then there's an opportunity to arbitrage here and pull forward those cash flows and finance it versus DCing it through time.
Hey,
I just want to,
Cosmo. Oh,
can I jump in there real quick?
yeah, go
Just
ahead,
two
Pink.
seconds. So, Thomas, you just literally described way better than I could exactly what my strategy is. Pull forward, lump sum, and then treat the servicing of the debt as the DCA. And it's not that I have a super high risk tolerance. I just have a lot of empathy for future me that didn't act when I could have, right? The pain of regret is so much worse than the pain of making a mistake. I'd rather regret what I did instead of what I wished I had done, and that's exactly what it is. And the last point that I would make on that is that if we all think that the dollar is being debased, and we all think that Bitcoin goes up over the next 5 years, 10 years into infinity, then you're getting a double benefit because the Bitcoin is going up in value because it's being inflated and there's a limited supply. At the same time, inflation is destroying the value of that debt. If you owe 100 grand 10 years from now, that 100 grand isn't worth anywhere near what it's worth today. So as your value increases, the value of your debt decreases. You're getting an additional order of magnitude of benefit there as those two things separate. The debt's going in a downward direction and the value's going in an upward direction, and the space between them grows by two.
Yeah, God, this is an epic conversation right now. I hope everyone's getting as much value out of this as I am. Cosmo, I wanted to ask you a question and also frame it in the context of time. I think the element of time in this whole conversation is so incredibly important. And so, just curious, in your thesis, Cosmo, in your particular situation, what is the time horizon you're thinking about? And just before you answer, again, for this context, to me, it's like, it's almost more risky the shorter the time horizon is for you, because you can't necessarily predict if we might go into a bear, versus, in my opinion, if you're extending it out maybe a year, 2 years, 3 years, over that time period, you would expect on average it's going to go up, probably considerably. Whereas if you're just doing it for a month or 3 months or 6 months, it's a little more difficult to try to predict if we're going to be dipping lower or sideways or going up.
Yeah, I think I mean, it's over a longer period of time. This would not be something that I plan on doing in 6 months. And I think that, like, one of the big comments I got to your question was, hey, like, yeah, now's a bad time. Wait for it to come to a bear market. Wait till we like drop down. But like, I'm not one to trade, right? So that almost feels like a trade to me, where I'm waiting for a low and then I'm going to get in, when it's the most convenient, where, like, over a long enough period of time, that will, hypothetically, right, if we all believe what Bitcoin will do, what it's going to do. And for me, the level that I'm allocated, it's like, you know I'm so heavily into it that, that's kind of my, anyway. But like,
So with your thesis and your numbers, what are you thinking of? 1 year, 2 years? Just curious in your mind.
I mean, it depends on a couple of things, right? So I think that I'm not really worried about the time frame. I'm going to hold it as long as I feel comfortable, right? If there's a moment of discomfort and I'm in a spot where, or I feel like, I'm good. I've, the Bitcoin that I've held is double. I kind of just don't like the burden of debt, because I am one of those people. I don't like debt, which is why, if you notice in my post, I'm like, convince me, like, talk me out of this, because I don't like the idea, but I really don't have a good reason not to do something like that. And over a long enough period of time, like we talked about with the sailor thing, with mortgaging your house or whatever, it's going to end up being profitable. So I don't really have like a time frame. I'm willing to hold it. The term would be between like 7 and 10 years. Like, totally happy to do that. But if it comes to a point where I'm like, what, I'm happy, I can, kind of finish out the term now and pay it off, and then, live my life, and I'd want to do that. But if I'm, underwater, I'm happy to hold it to
Hey,
duration.
Cosmo, let's quickly jump to Joe and then back to you guys, Hoddle and Broad, just because Joe's going to be called into the judges' chambers here pretty soon. Joe,
Actually, I just got out of the judges' chambers, but the one thing I was going to point out is that for Thomas's point and Pink Shirt's point, right, this isn't new. This happens with a lot of assets with respect to pulling forward, future gains, borrowing, and then reinvest. People have been doing this in the S&P 500 for decades, right? And what you can do with some simple math, and if you don't want to do the math, you can ask GPT to do the math for you. Is you can actually prove mathematically that it's cheaper if your strategy is I'm just going to borrow in today's current interest rate environment to just put long call options that are out of the money for a decent strike, and do it 2 3 years from now, and it'll be cheaper than borrowing a bunch, particularly if it's a high rate environment. You can run these calculations, but I was looking at this previously, and I found it to actually be, even if you can get a loan, like say you get a $400,000 loan at like 7%, right? If you were, which is pretty decent right now, and you think Bitcoin's going to go up, let's say to $200,000 within the next 2 years, mathematically, it would be cheaper for you to put that trade on with long call options than borrowing at that interest rate, and you can prove it out. So just something to consider if you really want to take the strategy. Not that I recommend it, because I don't. I don't recommend this for a variety of reasons, because I think most people can't stand it, and they'll say they can withstand it. But I knew people that by name that took out mortgages and HELOCs, et cetera, in 2021. They got absolutely crushed, and panic sold the bottom at 25,000. Give you their names, but just my thoughts.
Yeah.
Joe, when you do
What?
a calculation on that, uh, certainly long call options de-risks tremendously. But and again, I'm just thinking out loud here, and just correct me if I'm wrong. On the long-term call option, you really only score if your premise of, and your what you said in the example, goes to 200,000
No,
because I'm going to buy my
that's not
brakes
right.
around.
That's not how options work. So it's we can't get into an options conversation. I don't want to encourage people to trade options. You can get absolutely wrecked at trading options. But if you buy far out of the money options, and let's say next month the market moves 25 30%, you can sell those options even if we're not at 20K, 200K.
No, no,
Yeah.
no doubt. Yeah. So, uh, yeah, I do think it's worth an exercise. I mean, if you're going to go through the effort of borrowing, you know, three, four, $500,000 on home equity and employing the strategy, you should absolutely do the homework on figuring out, is buying a similarly leveraged position in long-term dated options a better way to do this so you don't entangle your home in this strategy. The thing that, because the options are cheaper, people overextend and they buy more than they should. So if I were to borrow $300,000 today on a home equity line and buy Bitcoin, I'm essentially buying 3 Bitcoin. If I did the long term call strategy, I could probably get myself exposure to many more than 3 Bitcoin. And that's where people get
and,
jammed up on the
and
out.
you cap your downside, and you cap your down. That's the beauty of options, right? Like
Yeah.
if they're cash covered, you basically cap your downside to a certain amount. I can only lose what I put in. You can sleep real good at night. Having that, I sleep all the time. I have options all the time in the equity market. I love it, because that's the purpose. You want to have a defined risk reward. That's what you're trying to do, a defined risk reward. But I will tell you, as a counter argument, right? There were people that were in these spaces buying call options at the beginning of 2024 that expired worthless, right? $200,000 call options by the end of 24. They expired worthless. Those things only went down from there, because the price trended sideways for a large part of 2024.
Hey,
Yeah,
Joe,
and I
why
think
we
that. Yeah, I was gonna say that I think that would be kind of my hesitancy with using options because I'd have to be very specific on, when's my expiration date, what strike price do I think it's gonna hit, and if I'm wrong, then I lose all that time that I spent doing that instead of just grabbing some Bitcoin. And maybe I'm wrong. I haven't run the math on it, but it feels less risky to just kind of hold through the
It's
downturns.
only less
But
risky because you are completely convinced that it goes up over the long run. And there are scenarios, right, where okay, I don't believe this, right? But I don't think it's crazy to think Bitcoin can hover around 140, 150 for, 4 or 5 years. I don't think that's nuts. I think that would be, conceivable. Not my base case, not what I believe, but it's possible.
Hey, Joe, while we have you real quick, and then we're going to jump straight to you, Hodl. Have you looked at any of the Bitcoin-backed loans? And if so, are there any that you think are promising or might be heading in the right direction, or are you avoiding those altogether? There's just so many. I'm curious if you've dug in at all.
I have not dug into anyone's in particular. I mean, I'll give you my overall view on this, though, that I think major brokerage firms, some names you will absolutely recognize, will be custodying Bitcoin, and they will be allowing Bitcoin deposits within the next few years. And it's not going to be dissimilar from a brokerage account. Like I can borrow against my brokerage account. So to me, I think all these products are still sort of they're not for prime time. Those prime time products are coming. It's just a matter of I'd say give it another year or two. Now you may say I don't want to give it another year or two. I want to go now, Joe. I have FOMO. Okay, well you're just taking a little bit of risk, and to me, I'd rather de-risk until you get the major institutional players offering these services.
Yeah, copy that. Thank you. Hodl, thank you so much for being so patient. We'll go to you and then Broadsword. Leonidas, that's you.
Hey guys, thanks for letting me come on here. I had a quick question related to the same topic. So I think Fred had a post about Sovana.io, and I know Thomas, Joe, you guys are all talking about a scenario where you may take some equity in your home and then add on that HELOC and have monthly debt service payments. But what about a scenario? I thought Sovana.io seemed interesting, where up to a 10-year term, you can close it out anytime. Uh, you're sharing the 50% upside on the Bitcoin price. As the owner of the home, you're taking all the downside risk, but there is no monthly payment or debt servicing. So the benefit to someone who may not have the cash flow to take on that extra HELOC is the ability to tap into their equity of their home without actually having to have any payments come out. I don't know if you guys
Yeah,
can opine on that, because that's a bit of a twist versus
there's
actually
definitely
taking.
good
Yeah,
products like Savannah, which I think is great, and Horizon and things like that. We were just discussing not based on home equity, just based on taking out a loan for those that don't have a house or don't have home equity. But those are great. Yeah, we
right.
talked about Savannah for a little bit yesterday. But yeah, for those who don't know, real quick, what it is Savannah will buy the Bitcoin for you. You don't have to spend any money on Bitcoin. But if it goes up, you split it 50-50. So they buy it, but they get half and you get half. If it goes down, the down is covered by the equity in your house. So you end up being insurance. Your house ends up insuring Bitcoin if it goes down, but if it goes up, you only get half of it. So that is a scenario, and there's so many different creative ones these days.
It seems like an expensive give up to solve a cash flow problem uh, that there's other ways to solve. I mean, I looked at that product that when Fred put it out there. You're taking the downside risk and giving up half the upside. I don't personally. I just don't think that's a good ratio.
Hey Terrence, I can't see if there's hands. Can I ask a quick question to the panel?
Yeah, sure, but we have Broadsword who's been waiting.
Okay, yeah, go
If
broad. I
okay,
just can't see hands, so yeah, okay, go
yeah,
broad.
scroll up and back down, and they'll pop up again.
All right, hey, good morning, guys. Cosmo, welcome to the dark side, man. Congratulations. I think we started this conversation when we were still doing the morning show with Craig, long time ago. Yeah, you were saying how you were risk averse and stuff like that. So just want to say congratulations for actually really mulling over. One piece of advice and one question. The piece of advice, if you want to de-risk more, I would say, why not put the 75K into Bitcoin, save the other 25K sitting there, and then slowly pull it out just to pay the interest on it. I mean, this is like speculation and math, and I'm sure there's a lot of smarter people on stage here that can give you a better idea than that. But my actual question is, in this case, when you're coming to it, what is your opinion of the 4-year cycle? Are we going to have a blow off top and go into an 18th month bear market? And I've been trying to bring up this conversation a lot, but usually I get either laughed out of the room or it's just people saying, oh, well, it didn't happen before and blah, blah, blah. So that's the real big thing to consider. What do you think the macroeconomic conditions are and what's going to be happening moving forward so that you don't, quote unquote, buy the top and have to hold through the bear market like I did?
Yeah, I think to your first point, like I mean that's a good strategy. I mean, if you were just to hold it down and then make the payments with that, that makes sense. Like I don't see anything wrong with that. To your second point, that was one of my main things I got in my comments was everyone was like, "Oh, just wait for the bear and do it in the bottom of the bear." And I think people there's a lot of chrono bros out there. That's what I call them. People who expect that, they count out the 18 months since the halving or whatever, and that's when we're going to start going down. So everyone's like, "Yep, September's the end of the bull." And I think yeah, I don't think people are paying attention well enough to like kind of, but yeah, I think that the kind of cycle theory is probably going to end up. It's going to be obvious it was more about liquidity than timing after the halving. So I don't think that the cycle continues exactly it has as it has in the past. I think we're going to see that change a little bit. And so
Cosmo,
yeah.
buddy. Hey, we've got Jeff in the crowd too, and I know oftentimes we don't have a lot of time with him.
Oh yeah,
So
let's bring Jeff up.
Yes, but yeah, and I want to hear from Jeff, but Joe also put his thumb down, so I'd love to hear him, and I think he probably aligns with you, Cosmo. Joe, can you comment on that?
Yeah, you can go with Jeff first. If I'll
Okay,
comment after.
just want to make sure you're not jumping in a depot. Hey, we've got fourth and down Jeff here. How's it going, Jeff?
Doing well, doing well. Excited to hang out for a bit.
Jeff, I understand you got a big hug in with my guy, pink shirt guy in Las Vegas. Pretty exciting stuff.
Yeah, you damn near tackled me. Yeah.
He's a brute, isn't he? He's like
Yeah.
6'4", 270. He's just yeah.
He's
He
a
could
big
have
hunk
been
of meat with an effeminate shirt.
one of your linemen for sure.
Yeah, absolutely. Absolutely. Well, hey, there's some exciting things going on. And you guys are talking about these kind of HELOC products and these lending products. And I think it's timely to talk about the MSTR products that are hitting the market, right? And the new perpetual preferred equity, STRD, and how that aligns with the other instruments in the market. And it's kind of interesting to rethink the design of how some of these things work or how you may
Hey Jeff,
structure
can I
your.
interrupt you real quick?
Yeah, go ahead.
What do you want to just come on another time and get into more detail about some of these things
You just told
specifically?
everyone to shut up so he can talk, and now you're
Sorry.
telling him to come on,
No,
schedule another
I know, but
time.
I don't think he has probably the time to actually get in depth, but maybe just touch on
He
these
would
maybe
have without
clean
all
up.
Yeah.
this jibber jab.
Well,
I'm
yeah,
being
I could
scolded.
definitely, I could definitely hit on it, but
Sure.
I,
Yeah,
I was
yeah.
just going to simply just walk through, right? You've got two options, right? Like you can take like a lending product on your Bitcoin and have Bitcoin exposure long. You could hold it in cold storage. You could do these products, and it's kind of a debt instrument. Or you could take this new approach, which is an equity-like instrument, and redesign your life based on the equity-like exposure that's getting paid dividends with a separate risk return metric. So like the world is getting redesigned with these instruments. I think it's valuable to review them and see how they may fit in a portfolio. That's all.
Does he need to schedule another time to restate that, Lauren? Are you okay with that?
Jeff, I really think we should get into these more in depth at a
Yeah,
future
yeah.
date. Hey,
They're super interesting. They're super
yeah,
interesting.
DM me any if you're available anytime over the next week or so that we can get you in here to really go deep on
Yeah,
these.
my question, Jeff,
Cool.
I'm curious what you thought. Did you see it's the first tweet in the nest up there. We were just talking about this idea of using Misty as a way to kind of pay back monthly payments for a loan over a period of time. Um, I mean, there's a lot of plebs out there who would like to be able to use the time allotted them now and kind of push forward their opportunities to buy Bitcoin, and also not have to put up their own Bitcoin as collateral and get margined.
Right. I mean, it is an option. Everything that you do in this marketplace has risk, right? And so if you're taking that exposure with MSTY, the way it's generating a yield is monetizing the volatility using the derivatives market. So they are selling calls and harvesting the premium, still having directionally long exposure to the underlying MSTR stock. So the risk that you take there is that the stock moves incredibly fast in a short time horizon, and your principal decays quickly. And so there is risk associated with it, but it's a great product, right? I mean, it's spitting out what 5 to 10% a month on principal, and I don't know another product in the market that's doing anything remotely close to that. So it is one way to skin the cat, but there is risk associated with it. I would caution anybody that's full YOLOing or full porting MSTY with that in mind.
So, do you think it might be maybe better to look at structuring a personal loan by buying Bitcoin and then maybe using a portion of that to buy one of these fixed income products like Stride, Strife, or Strike to maybe facilitate, making those payments?
Yeah, and I think that's probably the most efficient solution is having some sort of combination of all of the products, right? Like everybody, most Bitcoiners been so focused on this kind of like full YOLO, like full Bitcoin, but you can make a portfolio of all this stuff. Like every single one of these products has a different risk return metric.
Oh, I think we lost him. Do we lose him?
Did
He
he
had to
just
go punt. It was fourth down. He's
he
running out
missed
onto the
the
field.
goalposts? Yeah,
He pinked one, yeah, off the
it's
goalpost.
a conversion.
But I like that thought. I like, structuring all of these
Oh yeah,
things. Oh, go ahead.
He's back. Nice punt.
yeah. You could you
Good
could structure
saying.
all of them. Yeah.
And if you're really trying to do portfolio optimization, I don't know how much people want to talk about portfolio theory, but you really want non-correlated assets with one another. That's going to maximize your return. There's data to bear this out. I mean, there's a lot of finance questions we're getting into, which are particularized.
Joe's talk about mitigating risk and volatility and different things spread out over whatnot. I think we're just so boned up on Bitcoin in here that that's what we love. So
Hey,
Yeah.
while we
It's
have
Bitcoin
it's a
today.
concentration risk that have your income associated with the payment and also with
Correct.
the
Yeah.
asset that you're buying.
Correct.
The asset that you're buying. So like, there's BDCs, there's preferred stock ETFs that'll pay you 10 to 14%. That I don't know. You might want to think about. I agree with Joe.
hey, while
Hey
we're on this
Terrence,
subject,
can we
because
take a can we take just a 5 seconds to hear? I was curious to see what was going through Joe's mind when he met Asteroid in person for the first
Yeah,
time.
I'm wondering what was going through your mind as well, Joe.
I wa-
Well, I know you weren't in Vegas, but somebody was claiming to be you at the bar we were at,
There you
and it
go.
was
There
did
you
he
go.
did he look like George Costanza?
He looked like a homeless man.
Joe's a
Yeah,
full freak out by
I,
Joe.
I don't really know what the game was being played. You can't be too careful with the scammers these days. They're all over the place. I get calls from people pretending to be my wife now with robo voices. So I don't know
that's
what
Lauren.
I don't know what the game was, but I can assure you that it was a poor knockoff. It wasn't like a person I actually thought could be Asteroid.
Hey, question for Jeff or anyone on here. Just, I'm curious about the pros and cons that you guys see with different types of equity for Cosmo, you're talking about personal loan. We've been talking a lot about home equity. Like, is there any thought on the panel of like which of those would be better, or do you think it's just case by case scenarios?
I mean, I'll just jump in if Jeff's not and say, yeah, it's totally case by case. I mean, some people own homes and they have very low rates and they can refi, and why not do that against fiat when you have appreciating Bitcoin? Some don't have jobs or might have bad credit, and so they need a Bitcoin-backed loan. I mean, in any case, everyone should be thinking long term and be able to cover the debt, if there is a downturn. Just like Pink Shirt, I was in the same boat as him. I, did a refinance on my home when we were at 44K, bought a bunch of Bitcoin, wasn't happy in July of 22 when it dropped down to 15, did not feel good. But today it feels pretty good.
Yeah.
So
So just Terrence, like to your point, all right, if your big fear is the Bitcoin price is running away from you, if that's your big fear. Like, there are simple strategies to mitigate against that. Okay, very simple strategies. That's what we're going back to with some of these options that are not complicated, and they're insurance policies. Like, let's say I want a DCA for the next 5 years. That's my plan. There are simple strategies with the options market where you could basically just say, okay, I'm going to take some insurance protections against this thing running and being at 500K in the next 5 years. At the same time, I'm just going to continue my DCA strategy. If the insurance policy pays out, I'll be extremely happy. If it doesn't, that's why you have insurance, right? You don't want it to pay out. You have the opportunity to just DCA. A lot of different strategies. It really depends on what your goal is. If your goal is like, income, you got enough of a nest egg, that's completely different if you're in a, someone in their 20s and 30s and you're in a growth mindset.
And you can do the same with any of these other equity products that exist in the market too, right? Like the Strike preferred equity, you could be long, effectively have a free option long and buy puts on the downside as an insurance protection that it goes the other way. So yeah, it's helpful to take a holistic view of like what are the risks of your whole portfolio and what are the options.
Hey, Jeff, have you looked at any of the Bitcoin-backed loan products that are coming out, even though some of them may be a little premature? Do you have any favorites, or have you dug in at all? We've just been asking everybody today, just curious.
Yeah, I've looked at them. I still feel more uh interested in the equity like products compared to the loan products, just given the interest rates associated with them and the fact that I don't have a job, so I'd have to figure out how to monetize the debt service. And that's just something I'm a little bit less interested in the moment. And I don't want to have to feel like I make a decision on that, right? Like I could, I mean, heard somebody mention, right, you could have your Bitcoin tied up in it and sell Bitcoin along the way to service the debt, but I don't want to have to make that decision. And I, well,
Oh, I think you're cutting out there, Jeff.
Fourth and long, send Jeff in, please, ladies and gentlemen. Punt.
But yeah, I
Uh,
feel like that's a good point that Jeff makes to your question, Jesse. I feel like it really just depends on the person. And so, the structure you kind of build around it is going to depend on what your goals are. And so, I mean, if you're smart enough to kind of understand how all these products work, and I'm not, right? I'm still digging in all this kind of stuff, but the goal is to understand them well enough that you can put together a portfolio that one works for you and two that you're proud of. So,
hey, Karan, welcome to the stage. I love Karan. He's super, super, super smart. Curious on your thoughts on all of this today.
Oh, I have nothing smart to say. I have been taking a little break from X. I haven't jumped on a space in about a month. And then I saw all the photos of all you jabronis hanging out, having so much fun in Vegas, and I was having major FOMO. So I was like, man, I got to get back and say hello to the boys. But yeah, I've been in the fiat mines. We've been busy selling a couple of our portfolio companies. We acquired another one out in Yuma. So my diversification is pretty simple. I'm in Bitcoin. I think of it in the context of capital appreciation, and I'm in some MSTR, and I'm in some, some of Mahler's new entity. And then outside of that, my diversification is my equity in the portfolio companies that we run, where we have majority control. So, at least it feels like we have a bit more control on what we're doing with it. And then we take the dividends from those companies, and when I get them, I convert them to Bitcoin. So, I mean, it's a pretty straightforward strategy for me. And I think the point that was made earlier about if you're going to diversify, then actually diversify, which means diversify away from the underlying and not just diversify by having products that are built on the same asset. And so I think one is, do you want capital appreciation or do you want actual income? So then you can think about, to keep it simple, MSTR, MSTY. And the other one is the diversification piece. Like, hey, do you still believe that you should be in some asset outside of just Bitcoin? And if that's the case, then you're not really diversifying by getting into, the Canner vehicle or, Nakamoto or whatever else. You're just leaning on a structure for maybe cash needs or something like that. So I think finding clarity is probably the number one thing. Like, what are you trying to do? For example, my brother-in-law, he's kind of retired, and so I put him in MSTI. He's just like, dude, I want to go fishing. I don't want to have to worry about it. I got, like, what can I was like, you got $1 million, put it in here, and that'll cover your your bait and your boat and your beers, and you don't have to worry about it. He's less concerned about capital appreciation, and like my nephew, and I was like, don't you fucking touch the Bitcoin. Get it, put it in cold storage, and that's your entire diversification. So I think it really depends on what you're trying to get done. And it's so good to hear everybody's voices. I missed you guys. Good to be back.
Love you, Karan. What's up, buddy?
Yeah, we
Missed you
missed you
too.
too. We missed you
Yeah.
too.
We
Hey,
missed you
hey,
shirtless by the pool.
Jeff Son, what's up, punter? Um, are any of you guys going to Bitcoin Prague by chance?
I'm gonna try.
Come on,
Keep
some of you
hearing good
guys have
things
to come
about it.
join me there.
Yeah, people keep talking about it, saying it's gonna be
I
awesome.
mean, if you've actually never been to Prague, I would say just as a destination, it's one of the bucket list locations on Earth. It's out of all the European capitals, it was the only one that didn't get bombed to shit in World War II. So you've got literally like 500-700-year-old buildings there. It's stunning. It's a beautiful fucking place. Especially, it's a very romantic city too. Take your loved one and score bonus points.
Well, what if you don't have a loved one? Can we just find one there? That's my plan.
Hey, the women aren't too bad looking there.
Lauren will go with you. Yeah,
We'll
Lauren's
figure
available.
it out. We'll figure it
Hey,
out.
I just jumped up two reasons. Number one, I wanted to just put a cap on the Vegas experience. It was so cool to hang with several of you guys. Um, really nice to meet everyone, and Vegas was quite a circus. I uh, I had some fun. It was one of my less favorite Bitcoin conferences I've been to for a variety of reasons, but hey, it was a great experience, and one of the highlights was meeting you fine folks, several of you. So, man, spend a little time with pink shirt guy in a Uber, and fun ensues. It's good times. Anyways, I wanted to jump up because all this discussion about MSTR and MSTY and all these things. Man, my big takeaway from this last bit of travel I did is the massive yet rapidly shrinking opportunity to actually stack Bitcoin at any kind of scale relative to what you've got. It's stunning. I literally was in a meeting yesterday with an attorney and a some what was it, a notary, and neither of them had heard the word blockchain before. It's unreal. Like, this bubble that we are in, and the awareness that's here, and the perspective that's here, is so rare. So, it hits me like a ton of bricks. There's all these opportunities, and it is kind of a spectacle to watch Wall Street and the whole sort of financial industries out there, just machinate and do their alchemy and come up with all these things. I still, I'm one of these guys. I'm stuck on, just get the Bitcoin and take self custody. Like, that's really the opportunity that I believe decades from now is going to just hurt so many people that they did not take action when they knew about it, or that they somehow insulated themselves from this information and these perspectives, and missed the opportunity. So everyone who's here is kind of still got the opportunity to manifest a difference in your life because of this thing. And I don't know, I'm hit real hard by it. Just one last little anecdote is, on my flight home from Vegas, I was sitting next to a guy who's a real estate guy, and he says he's got hundreds of properties, and he was just telling me all the problems. He's got squatters in a property in Colorado, and he's got, roofs to replace and all this. And I'm just like, can you imagine if you had a piece of property that had no mortgage and no property taxes and no tenants and no repairs? Could you imagine that? And his eyes just lit up. And I just said Bitcoin. And it's one of these things, people just don't get it. What this represents is this property you can own that just doesn't have all the hassles. And by the way, you're gonna, outperform real estate and everything else in the long haul. So, anyways, that's just my contributions. Again, really great to hang with you guys and meet several of you. And that's all I got to say. Stack sats, take self custody.
Will you be there next year, TC? Are you set?
I mean, I will hold my nose, and I will probably be there. Yes, I will hold my nose and I'll be there.
That was a mic drop. I'll just add that TC is the man. His beard in real life is just as cool as his picture. I hope that doesn't dox you too much, buddy.
On a lighter note, thankfully I was able to spend some time with TC as well, and people are getting it. Um, we went out to dinner with somebody who actually is and was in the circumstance or situation to be a land owner, and is converting his properties into Bitcoin. So people are waking up, and it is happening. So it's exciting to just be here watching this, and I'm thrilled to have people like TC in the fight and educating people on, the amazing qualities of Bitcoin.
I
So
mean, that's going to be the most incredible trade. You had the last 50
for
years where,
sure.
the wealthiest people out there right now are people who really, really took advantage of the dollar short, was able to take out a lot of money to buy real estate. And since that was the easiest way to short the dollar, it ran up like crazy, right? So, but now we're kind of at a point where it's disturbed a little bit because there's a better way to store your value. And so, I mean, the trade of the last 50 years and the next 50 years will be moving money from real estate that, your investment premium is probably, you know, 50% of your home value is probably investment premium, and then moving it into Bitcoin. That's just going to be the trade.
Yeah, and you got guys like Grant who are actually finding creative ways to, I don't know the best way to define it, maybe asymmetry, doing it in real time, doing both. So they're not just, going all in Bitcoin, which, many of us in here would suggest. However, he's transitioning simultaneously holding both. So I think it's very creative and also a way to showcase Bitcoin's qualities to people that are like 100% all in on real estate. So hat tip to Grant Cardone.
Dual collateral instruments are the future. You got two pieces of collateral. That's anybody would take that loan over having one piece of collateral. It's a no-brainer.
Wide weapon. I see your hand up.
Yeah. So Cosmo, what is your view before you take out this loan and stuff for the next, we call it 1, 2, 3 years of what you think Bitcoin adoption and price is going to do?
Dude, I have no idea. And I think anyone who tells you that they have a clue on what's going to happen is foolish. I just know that, like, there's a good chance that over the next 5 to 10 years, it's going to be worth more in nominal and real terms than it is now. And I don't think that the government will become more fiscally responsible. I just don't see, the whole nothing stops this train idea. And that's kind of where I'm at. That's why, part of this idea, this thesis of taking this loan out doesn't involve waiting to the next bear. It doesn't involve trying to time the market at the bottom. All it is looking at what's going on, what's happening, and being real with myself. Because, like I said before, this isn't particularly fun for me. Like, I want to be talked out of something like that because I don't particularly. I mean, I handle debt okay, but it's just not fun. It's not fun. But like I said before, what is the proper allocation to an asset that you understand this well and that's going to perform this well? Is it 40%? Is it 60%? Is it 100%? And if it's 100%, is 110%, right? Is it a responsible 100%, 10%? Then is it a responsible 120%? So the question is like, at what point does it become irresponsible? And then you back up from that a little ways, and that's your allocation, right? And so, in my thought is like, it's over 100%. Where that is, I don't know, but that's just my thought.
Hey, maybe we can get PSG to weigh in here on, because I'm with Jeff in that I have no job, I have no income. So to me, this is a little sketch.
You
Like,
sound like a Bitcoiner, Lauren.
no, I'm not, because I'm a guy who just paid off a six a 6% loan on a vehicle just because the 6% was making me nervous at night. But PSG, maybe just speak to, like, I mean, this is what you do. This is, maybe the psychology behind, because we're not all in the same position in life. There's some people that are just willing to go hard and, go all in on stuff, and there's other people who, we just all want to sleep well at night. PSG, do you want to kind of speak to this?
Yeah, I think the first thing that always comes to my mind is there's a difference between being in debt and having a debt. I don't like being in debt either. But in Cosmo's case, where he goes and gets $100,000 loan, yeah, he has a loan for $100,000, but he also has $100,000. If I have $1 million in my bank account and I owe you for lunch, I have a debt, but I'm not in debt. And that's a distinction that needs to be made. And I think the psychology surrounding that simple idea is really powerful. And then secondarily, I would just say too that we're indoctrinated regarding debt, and it's not that our parents or the older generation, the boomers, for lack of a better word, were wrong. They paid double-digit interest rates for mortgages. Like they got hammered on debt, and so the obvious thing to do was to pay it down as fast as possible. They weren't wrong. They just lived at a different time. And unfortunately, we've learned from them, a younger generation. I'm 43. Some people are younger than that. But we just have to really be aware that you're executing your strategy. That is probably the thing that I would leave people with is like, oh, people think Misty is great, or they think this idea is great, or I should do it this way. You have to have conviction on executing your own financial strategy in the same way that you have to develop your own conviction about Bitcoin. You can't do the thing that somebody else thought was a really good idea.
I suppose some of the distinction is also, are you borrowing because you have FOMO and you just want more Bitcoin, right? Like you're taking risk to increase your future wealth, or are you taking out, or are you at a place where you actually need to make an expense? Like in which case, maybe there's sort of a tipping point where it is worth just spending some of your Bitcoin. As much as I subscribe to borrowing off of your Bitcoin and not selling your Bitcoin, there's times where that will just be more peaceful and a better decision long term.
Yeah, I have a ton of analogies, and they're not ever as good as sailors, but like I like the loaded gun, right? You hand somebody a loaded gun, and they don't know what it is, it's going to end badly, guaranteed. Like there's no question, right? But if you put that into the hands of one of our highly trained military brothers and sisters, like they can defend a nation, or you put it in the hands of a hunter, they can provide food for a family. You just have to know what it is, understand it, and then execute, and stay as far away from emotional decision making as possible. And then also, Bitcoiners are good at critical thinking. Point that critical thinking at yourself, and ask yourself, how will I react? Because Joe's right, at scale, a lot of people are going to get into a lot of problems, pursuing some of these strategies. But we're not talking about scale. We're talking about each individual person executing on their individual strategy that they have a conviction about, that includes things like taxable dispositions. It includes things like the time horizon, right? Like if we're investing for the next 11 minutes, it's not going to be the same thing as saying, I'm going to own Bitcoin till I die. And so I'll write it back down to 16,000 as long as I can service my debt. There's a whole breadth of possibility. And it starts with the goals of the individual and how to understand and execute a very specific strategy in their specific case. Very, very rarely will two people have exactly the same process. And so we can all learn from each other and help each other, but ultimately don't ever pull the trigger until you know exactly what you're pointing at and what you're trying to do.
Yeah, one other thing I'd add is you don't always have to leverage your finances. You can always leverage your time as well. And I think it's helpful to think about your time like that, right? Like for many people, the best thing they could do is figure out how to make more fiat dollars coming in the door. So leverage time more appropriately in order to stack harder that way, as opposed to, taking out financial risk if that may not be something you're used to or, willing to stomach into the future.
Hey,
Yeah,
Jeff, real quick, has there been any announcement about where you might be August 1st? If not, I'll keep that quiet. I wasn't sure if that was public yet.
Oh yeah, no, I will be at Bitcoin is for Everyone on August 1st in Portland. And that was the first Bitcoin event that I had ever been to, and a fantastic event, a great time, no shit coinery, just completely awesome.
Awesome. Yeah, I was telling people in Vegas about it, and I was surprised how many people had not heard about it, but I know it's much smaller, but it's a 1 day, all day, very, very high signal event, 3 stages, lots of macro master guys like yourself, some hardcore Bitcoiners, and there's going to be like D++ and Portland Hodl and people like that, I think, are there doing all kinds of self custody and tech stuff. And I'm excited to go. So hope to see a bunch of you there, and I'll finally meet you too, Jeff.
Yeah, it
Don't
was.
forget Dennis
I
Porter.
heard they got a good MC for that event.
Yeah, Terrence didn't want to blow his own horn, but
That's
I'll
because
be
you always
there
blow my horn,
as
Lauren.
ooh. We are going to try, ladies and gentlemen, due to feedback from the public, to steer a little more clear from the homoerotic, what was the word, PSG? Innuendos, I believe.
Innuendos wrapped in
Innuendos.
bow.
Okay.
Yeah.
Yeah. So we're gonna try hard to steer clear of
And
those.
to
But
and to Lauren's credit, if you met him in
thank you.
person, you realize he does best on spaces because
I do. Yeah,
it's
because they just fly. I mean, I have the humor of a eighth grade locker room boy. Just it's sick. My wife hates it, but trying. And you get a couple drinks in me, which were in Vegas, and I feel sorry for the guys around me. But they were laughing, so I just wouldn't stop. That just encourages me. So unfortunately, yeah, I had a great time. Hope everybody else did.
On that note, let's go to Rusty Tits.
Restedy.
Hey, just I'm putting together some workbooks on this. So, Cosmo, are you saying you would just put 100,000 in? Is that what you were saying? I'm just because I'm going to run a couple scenarios using Misty, and whether you have income, and also if you were to get dividend yield, because dividends can be used as income for a personal loan. So,
yeah. Well, I'm not. I probably won't expose any of my income or anything on here, as you can tell. I have a NIM, so I'm kind of a private person. But I mean, the idea is like if you can pull out a personal loan, right? Nothing is collateralized, so I can't get margined. And that's like a big thing for me. I do not want any chance because in a flash, it could go down to nothing. I could lose all my Bitcoin, and I'm not about to do that. But the idea is you just take out a personal loan, and the thought was you put like 25%. It's more than I would need to make the monthly payments, but it's just kind of on the conservative end. And the idea of this is just to create a system by which I'm able to take out really cheap debt, and I literally don't have to do anything, right? The dividends service the debt, and I don't have to worry too much about it. And it's essentially, picking up some free Bitcoin. And over a period of time, if I feel like the market's a little overheated, I could pay it off and then, find myself in a better position than I was before. Maybe I'd have to sell a little bit of that to pay it off, but it just seems like a pretty safe way to go if we haven't already topped, right? So that, I mean, that's the only caveat there. And then if we did, then I just hold it for a little longer than I had expected, or even maybe even if we haven't topped and we've got a long way to go, I just hold it to expiration. But um,
well,
yeah, go ahead.
I'm going to run the scenario, but numerous ways, and just put it out there. But and
Right.
everyone can look. But because like I said, I've been doing this a long time. But the thing is, I'll say this just so everyone's listening, and not saying to do this, but think of it this way: if you were to go get a just use $10,000 because it's simple to multiply it. $10,000 at 10% loan at 5 years to pay back as amortized. That's $212 a month payment. Now, if you get $10,000 a day and buy $10,000 of Bitcoin, what will that Bitcoin be in 5 years? Okay, now let's run the scenario. DCA, 212 a month. What will you be buying Bitcoin for $212 in month 60? Those are the questions you got to ask yourself. 212 a month over that 5 years, it's 12,000, I think 720 roughly. So you're going to spend 12,720 over 5 years each month, and you put that in your head, you probably got in and didn't get near enough Bitcoin. That is what Joe was talking about earlier. Is yes, this scenario is used all the time. You use it constantly in leverage, but I'll put it out there, make it
Yeah,
simple,
and that's the
easy.
realization I came to talking to Pink Shirt Guy is like, if you are DCAing, just by nature of Bitcoin's appreciation, you're going to be sats are just going to get more expensive. So if you can move the entire purchase of your next, I don't know, 5 years of DCA into the present, and then service the debt as if you were going to DCA. I think you could back test that at any point in Bitcoin's history and you'd come out on top, So regardless of what interest rate you're paying.
Yeah, I have back tested it, and that's in fact factual. For sure, you can.
Hey, Eric Rice, we have not heard from you this morning. What do you think about this topic of borrowing off of your Bitcoin or borrowing to get more Bitcoin?
Well, yeah, sorry guys, on the phone all morning. I think that
Yeah, don't do that when we have spaces.
I try. Yeah, we, I haven't heard the whole scenario. I just hopped on here, but I saw Cosmos post last night, Depends on the type of loan you're taking. That really is the entire game. So if you're putting up Bitcoin to get more cash to buy more Bitcoin, I'll just be the honest guy in the room and say that's a bad idea. But I think that if you're going out and looking for a personal loan with high credit rating and great income numbers, and you can get, personal loans right now at banks are like 6.5, 7% if it's not collateralized or there's nothing at risk for you aside from credit rating. I would take that loan and I would seriously evaluate it. I also agree with these guys. DCAing over time, everything becomes more expensive. You could just take the cash, park it in like River or something, and get Sats for your interest. Wait for the right time, and then buy $25,000 chunks. That's how I started out. But I'm just not much into the using your Bitcoin to get fiat to buy more Bitcoin gamble, because we don't know how that'll turn out. Volatility is our friend, but it's also our enemy at the exact wrong time. So if you can get a non-collateralized personal loan that you're allowed to do anything you want to with the capital, then it becomes your decision. So I would just be very cautious of using Bitcoin to get cash to get more Bitcoin, because the more people I talk to, the more horror stories I hear. But free fiat from a bank where your only penalty if you have problems paying the loan back at some time is a credit rating issue, I think that's a worthwhile gamble if you're a high risk person. I'll reiterate my entire stance for the entire time is I'm sure that there is I met you, you're a very talented guy. I'm sure that there is some way you can go out and earn $100,000 in the next 12 months to purchase Bitcoin and not have the added stress of actually having a debt to repay. And if that's not the case, and you have the ability to draw six figures on a credit rating, like why wouldn't you do it at this juncture in history, whether it's to buy Bitcoin or just to have the cash available? The Misty thing is interesting. I actually bought a little Misty as my first non-Bitcoin investment I've made so far. I've been pretty happy for the last month and a half with the first distribution, but I don't know that that'll continue. You're young. That's a good thing. You can gamble early. You can gamble big and early in your life. And I think that's something that I would look at, but I wouldn't give you advice on what you should do, Cosmo. I just think look at it from the perspective of the debt is the issue, not the purchase of Bitcoin right now. And if you can get good terms on non-collateralized debt, why wouldn't everyone do it? In this economy, I think it's a wise idea if done properly. But focus in on the debt. If you can borrow that money privately from a family member for 7 or 8%, that's preferable in all circumstances. But if I were young and I had family members who had that money, I would say, hey, listen, I like Bitcoin. You don't understand it. Let's go 50-50. You put up the money, I'll manage the account or whatever you're going to do, and you split the profits. But there's a million ways to skin the cat with debt. And you don't need to collateralize your pristine asset to get another pristine asset with somebody caught in the middle. That's just my personal take.
Eric, let me put a variation on that for you because I like your answer. Let's say there's a purchase that would improve your family's life. Whether it's medical expenses or a house for your family, right? You're a Bitcoiner, and all you have is Bitcoin. Do you think it's smarter to spend some of that Bitcoin for that improvement in your life? I mean, that is why you are saving in Bitcoin in the first place. Or do you think it's better to collateralize that, get a loan off of it so that your Bitcoin continues to grow and you have that for generations on? It's sort of a spend versus borrow question.
Yeah, I mean, from my take, this is just my personal take. I have never been an LBO guy or dealing with leverage to buy assets when I have them. I think that spending it. I'll give you an example. So I have a decent Bitcoin stack. I was the first money in on my own deal for my own mine, and that's the only Bitcoin I've ever sold. So I sold a few Bitcoin to be the first money in, but that's going to produce, two times the amount of Bitcoin that I put in to get it out. That's an investment. On a leverage side, if I had an expense or I had a life improvement, like say I wanted to build an additional bedroom on my house, I would probably just sell the Bitcoin and rebuild. But I wouldn't even look at the life improvement unless I had the income to back it up. But that's
So
that's
you'd be
that's me.
okay, right? And just for argument's sake, so you'd be okay. Let's say you had to spend a Bitcoin for easy numbers for that extra bedroom. You'd be okay if, hey, 3 or 4 years down the road, that's a $17 million bedroom now.
I mean, for me personally, I would just be like, screw the bedroom. I'm keeping the Bitcoin. I mean, that's. I mean, I've done that. I've passed on like 3 deals that I really liked in the last 4 months because I don't want to sell Bitcoin for it, and it's not going to produce the returns that Bitcoin's going to produce for me.
But let me say it another way. If a lot of Bitcoiners are saving in Bitcoin so that they can someday have a house, for those that don't have a house and they want to buy a house, do you think in general they should just spend Bitcoin for that house, or they should get a loan off of the Bitcoin for that house?
Personally think that everyone should own their own home. That's just my take on things. I hear a lot of people saying, there is it depends. Like we all have different size stacks, right? So there's people with thousands of Bitcoin, hundreds of Bitcoin, dozens of Bitcoin, and not a full Bitcoin. I think until you're at a full Bitcoin, that you keep everything as cheap and as inexpensive as possible. If you've got 5 or 10 Bitcoin, it's going to cost you one to get a house. I would say spend the Bitcoin. And then I would work on income, and I'd work on, if that builds equity in the house, I can draw an equity line out on a dip and be able to buy my Bitcoin back. It's a tough scenario because everyone's different. But for me personally, I just look at things as very simply, I don't want to be in anyone's debt in an economic downfall. I think people far underestimate how much liability you take on if the economy crashes and you're heavily indebted, because everything you're indebted for becomes a claim by someone else. So the more debt free you are, the better your life will be. The more you can stack honestly without any sort of hesitation in the mind, which is if you're trading or buying and holding, mental state is everything. If you have full conviction, you're going to do what you're going to do. But at the same time, if you're fully convicted on Bitcoin and not convicted on yourself being able to earn enough money to do that, that's where I think a lot of people get in trouble. So find a secondary income. There's plenty of work that can be done out there to stack slowly. You know, by taking $100,000 loan to buy $100,000 Bitcoin and paying 8%, you might as well save up money and buy a pristine Bitcoin from a miner with an 8% premium. There's really no difference to the two trades. So yeah, I just I'm just going to always advise young people, if you have good income and you want to take a leveraged bet, that you better have that great income in case the bet you're making doesn't pan out. And as we know, over a long enough period of time, Bitcoin absolutely pans out. I couldn't be more bullish on Bitcoin, but I also couldn't be more bearish on debt structures with collateral. I couldn't be more bearish at this point in time. I think it's a huge gamble if you're using any collateral. So if you
So
need
you're not a fan of all these new Bitcoin-backed loans that are popping up everywhere?
I'm a fan of the real estate model that's coming out, where your loan includes the purchase of Bitcoin that you will receive upon full repayment. But the personal loan piece, I'm bullish on it, but not right now. I think we haven't seen enough run in the market space to realize who's not rehypothecating and who actually has the financial backing for the fiat that they're lending. These are two big questions that we really don't know the answer to. All the answers we have are from the provider. And if you're listening to the provider who's selling something and expecting that to be honest, you're making a big mistake. But I think that 2 to 3 years from now, when we've already had 4 or 5 of our buddies that have done this, and they pulled out 500 grand, they paid their 500 grand, they got their Bitcoin back, then I'll be all for it. I will be leveraging my Bitcoin stack as often as possible. But until there's enough traction in the marketplace and there's enough feedback from people who've been down the road and already gone through a full cycle with the debt, I don't want to be a guinea pig, and I love Cosmo, and I don't want Cosmo to be a young guy as a guinea pig for that model. I think that the people who are doing this right now are guys with 500 to 1,000 Bitcoin that are like, all right, I can use some cash. Take 5 Bitcoin, lend me X amount of money, I'll pay it back. They're the beta test for a reason. Let's see how it turns out with them, a year to 3 years from now, and then I think everybody in the market will be leveraging Bitcoin. It's what it's going to end up being in the end, is a collateral asset for fiat.
Yeah, yeah, Eric. Like to just clarify this example does not include collateralizing any Bitcoin. I'm 100% on board with what you're saying. I will not touch, Bitcoin backed loans until it's been through a bear market. 100%. I think that that's a good take. There's just too much. There's too many question marks, right? And it's a new product, and I think that there will be some people who do it, and we'll kind of sit back and be like, "Hey, don't do that." They'll go through with it and they'll succeed and there'll be no problems. But I don't want to be the guy that's kind of on the bleeding edge of what's happening there, because it's not worth that kind of risk.
But if you find your dream home, Cosmo, then would you spend some of your Bitcoin for it? I mean,
Uh,
that's why you're
I'm
saving.
I am too ideologically bearish real estate to have a dream home, to be perfectly honest. So maybe in the next 5 to 10 years, but by then I think the products will have been we'll see which ones worked and which ones haven't, and I'll be set. So I mean, luckily for me, I'm not in a position where I'm dying to get in a home. But I mean, if you were dying to get in a home, I could see maybe doing something like that. But I don't know, man.
Cosmo, is that what this is? Is this loan for a home or is this loan to buy more Bitcoin?
No, so it's to buy more Bitcoin. So I it's the first post up in the nest. The idea is it's just like a personal loan. So I have good credit,
Yeah,
and
no, well, let me, that changes everything. So,
yeah.
so Terrence just confused the hell out of me. Thanks, Terrence,
Well,
as always.
no, this is me asking because I have clients and this has been a big discussion with other Bitcoiners about who have been saving for homes, whether they just get a loan off of their Bitcoin or spend it. And there's no good answer because you're gonna have regret either way, I feel. And it's like which regret is better? Regret that you got rid of your Bitcoin too early, or regret that you now have this debt that's keeping you up at night? Um, and there's so many products out there. I mean, like you were in Vegas too, Eric. I mean, I must have run into a dozen people offering Bitcoin backed loans. So it's just sort of top of mind at the moment.
So here's my final take. So if you have the ability, so right now all these products, like I talked about yesterday, everyone's trying to creatively steal your Bitcoin, and there's no other way to put that. They're putting creativity and financial instruments around ways of them taking your Bitcoin from you for a period of time.
But Lawrence said if I send him 12 words, he'd send me 24 words. And that
That is
sounds like a
true.
good deal.
No lies detected here.
So on the other hand, you have fiat that also, and we bash it a lot, but the whole world does want fiat. So if the banks are willing to give it out to you, and the way I would think of this, Cosmo, is you're going to get probably a six, if you have good credit, like a 6-7% personal loan, which is a great rate traditionally on $100,000. So year one, just interest is, call it 7,000. Principal is going to be about 1,500 or 1,800. So if you have $8,800 or $8,500 of discretionary income that you can put towards Bitcoin anyway, why wouldn't you just use that 88, just dedicate that, just chop your budget as much as you can and put that $9,000 in discretionary spending into Bitcoin systematically and avoid the debt altogether? So that would be my take on it. Unless you know something I don't know, where Bitcoin's going to 200,000 next month, and in which case, if it does go to 200,000 next month, you're going to have to sell half a Bitcoin to sell off the debt. So you did all that work for a half a Bitcoin when you could have had free and clear a quarter of a Bitcoin with no effort.
Yeah,
Just the
that's a
way I
good
think about
point. That's a good point. Um,
I think we have T Swizzle and then Pink Shirt.
Yeah. So I also ran into similar questions like this after having been in Bitcoin for a number of years. And I mean, my determination was that I do not like to be in debt and do not want to be in debt, but I also don't want to like get rid of my Bitcoin, which is why I sold my house and bought Bitcoin with it. And so now I don't have a house and I don't regret selling my house. And I have, an additional stack of Bitcoin sitting there, and I'm not paying any interest rate on anything, and I sleep just fine.
well, not of us,
Uh,
not all of us have houses, Taylor. Not all of us can do that, dude.
Pink Shirt.
Yeah, I agree with every single thing that Eric said. I think that was really on point. And one thing that we all should be careful of, because I'm super bullish on intelligent leverage. My handle is hodl levered, for crying out loud. Is that as the price runs and as it goes up and the FOMO increases, this conversation is going to come more and more into the forefront, and there's going to be an exponential change on people's appetite for this conversation, and they will make proportionally more irrational decisions going forward. Like if Bitcoin's at 120 right now, this conversation is a lot more dangerous, I think, to the average person. And so, just all of us as a collective, I think, just being really careful about framing these conversations well, and not just under the caveat of, hey, not financial advice, but here's all my advice for you, right? Like, we just have to be careful as the price goes up, that these conversations become. I don't like the word dangerous, but there's more. There's more attack vector for people to get hurt and hurt themselves. So just being really wise. I think what I'm always advocating for is for people to be intellectually honest and intellectually congruent, right? As a society, we all agree that if you need to take out a mortgage to get a house, like, yeah, go get a house. Well, I borrowed $500,000 to buy this house. Yeah, but my dad did that, and my uncles and aunts do that, and my friends do that, and everybody. We're all aspiring to get a house. Like even the terminology of, "Oh, I don't have a house yet," it's just implied that we're going to go take out massive amounts of money to get a house because that's normal. Same thing with a car loan, not to the same degree, but if we're taking out loans because society will high five us and be like, yeah, that's fine, go get a house, go get a car, go, student loans. Don't get me started on student loan debt. If we're all just going to like wink and nod that all this is totally fine, like, how is it not at least wise to poke at the idea of taking, in Cosmo's case, an unsecured loan at a decent rate held for a long enough period of time and just ride the arbitrage? Right. I like this thought experiment. I'm not advocating for anybody to go do this, but just think about this, right? Instead of thinking about assets and debt, consider just the net worth. Just subtract the two. So if your net worth, or let's say you have $100,000 of Bitcoin, you hold one Bitcoin, and you have $50,000 of debt on your balance sheet as a person. If you could, would you add a zero to both of those numbers? Like, would you say instead of having one Bitcoin, I would put a zero behind that? Now I have 10, but I've also put a zero on my debt. Like, if you could, would you add three zeros to each number? These are
Yeah.
just good thoughts to sort of have and really um, be critically thinking about the things that we all just accept as normal.
Go ahead, Rusty.
Terrence, did you say you have people wanting to buy a house and they have a stack of Bitcoin and they're curious about?
Yeah, and some of these clients, they could easily just spend the Bitcoin and get the house and sleep at night and whatnot. But
Uh,
also knowing where it's going, and with all of these new products, they would rather have
let,
the arbitrage.
let me give you two points on that. All right, here's two methods. First off, lease to own, especially if you know someone who is a Bitcoiner and you can have an agreement. Second off, if you have that amount and could pay cash, basically, in theory, right, for the home. I'm just going to use a quick example. $300,000, you give it, well, immediately take out a HELOC, buy back Bitcoin. Typically, HELOCs will go at about 85%. LTV, you can get about as much back as you put out. I know this is very taboo to talk about. However, you're talking, what was say, 200. If we did 300,000, just put it at 250 just for safe measure. You're at a, interest only. Um,
Wait. Let me stop you, Rusty. In
6,700.
this scenario, they don't have a house, so there's no HELOC to get. So they
I'm saying
either
if they wanted to buy a home, they immediately paid cash for it because they liquidated the Bitcoin. Now they own a home cash.
right. Okay, right. So spend Bitcoin for the house. And
They
you're
spend Bitcoin, get the house, and then they go get a home equity loan because they have zero liens on the home. Any bank will give you a HELOC any day, and then you buy your Bitcoin back.
not if you're not employed. HELOCs are based on future income, not
One,
on assets.
I know, but if you have okay, I get that, but if you have it, you set it up enough where you can either have dividend income, or you could also just liquidate enough and put it. There's ways to structure this, right?
No, I
And you,
get that. I'm just saying you can't just buy a house for cash and then whip around and get a HELOC if you don't have income.
yeah, I get that too, but
Okay.
at the same time, if you put it into a structure where you put enough into, say, something else that's going to give you a dividend to have a payment, is what I was getting at. So I'm thinking through that. But if you did have an income, or even slightly, the interest is only going to be about 1,700 a month. So you don't have to have that much money in income to prove, right? Even on a repay period, it's going to be about 3,800. So you're only going to have about 45%.
Yeah, well, if you have income, you can just buy the house with cheap fiat. I'm talking about in Bitcoin terms. But yeah, appreciate that, Rusty. Lorna Cosmo, I'm not sure which hand was up next. BTC
It's
Noah,
broadswords next, and then I think Eric, Noah,
broadsword.
and Alexander.
Done.
So Cosmo, I totally forgot how much you don't like debt. So suggestion, why not take the 50K, put it into Bitcoin, save the other 50K just for paying off the interest payments and the principal and stuff, and now you're going to be able to hold out through no matter what the next however many years you're able to do that. Just wanted to throw that out there for you. So,
Yeah,
because
that's not bad.
I'm on the other side, I actually want to talk you into this because high believer that this is a great idea if you do it right, and you structure everything properly, and hopefully you can still sleep at night. But like, I'm a big believer in, especially for all us plebs, is to try to give people ideas of how they can use the current system to help them for the future by stacking more Bitcoin. So maybe just do 50K in a Bitcoin and then the rest just sits there. Just an idea.
Yeah, I mean, it's not bad, but again, then you have, a lot of, capital that could be allocated into, yeah, I mean, there's
Well,
a
depends
port.
on your
Cosmos,
risk, bro, right? That's what I'm
Cosmos.
saying. Like, you could do 75, you can do 50, but if you want to sleep easier at night, what's going to be easier? The fact that, oh, I put 50K in and now I can sleep easy because the debt's not burdening me? Or are you going to be like, shit, I should put more, right? Like, depends where your line is. That's why it's different for everyone. But I just really
Yeah.
Yeah,
wanted to throw that out there for
but
you.
Broadsword, it's also, again, guys, I also think about these lending products, and I will not use them. I burn myself so often, and I'm just getting over the realization that self custody is such a revolution. So to use a lending product to leverage more to buy more Bitcoin is not a use case for me.
No,
Cosmos,
no, but
think
he's
about
not
that.
using Bitcoin. He's just using an unsecured loan from the bank.
I
So
know,
you
but
borrow.
but for what? For what, Broadwood? We know the CAGR is at least 20%, right? When I take a loan, can I be more productive than 20%? And I still have a loan in fiat for, a house which I pay off, which is not even for me, which is for my daughter, which I probably never know. So, and I know how, and I think I got it to real good condition. So, but 15 years paying it off and really paying something off, right? I mean, just have a real reason for doing it, because I think I have like 2.5%, which I already say, okay, I took a loan about, what was it, 200,000? Yeah, and 80,000 I paid in cash. So a house for 300,000, and I had to pay off 200,000. That takes you 15 years. That's a long time. So have the right reason to take the loan.
Let's go to BTC Noah and then Eric.
Hey, what's up, guys? What's up, Lauren? What's up, What's Pink? up, Noah? Had a good Great to time see you, buddy. Yeah, I had a good time hanging with you Yeah, guys in man. Vegas, man. Likewise. And for the record, I enjoy the locker room humor. It makes me feel like I'm still young. Oh, So, dude. yeah. You were laughing, so I really appreciate just hanging out with you and enjoying beers and good times, pal.
Noah,
Yep,
did
great
Lauren
time.
buy you an apple teeny? He was buying everyone apple teenies. I mean, he bought me a Zima beer, but I
What the
prefer
fuck is
beer.
my Apple Teeny? Come on, man.
Next time, Asteroid. But just to go back to the Bitcoin back loans, it's just like cautionary tale. It's like I think Simon Dixon's right with all these loan instruments. It's designed to part you from your Bitcoin. It really is. And let's say back in 21, 22, I did the Aave thing, doing leverage and trying to maximize Bitcoin performance. And when it's all said and done, I probably lost like 20 Bitcoin with you know you get euphoric when it's up only, but then when the bear market comes, and it will come again, um, when you have these cascading liquidations, the fees skyrocket. Okay, when I look back, I think I spent like 75 grand just in like gas fees. Now it was wrapped Bitcoin, of course, but I exchanged Bitcoin for it, and it's really bad news, So if you're going to get a loan, it's better to just get an unsecured loan and not use your Bitcoin as collateral, because like I look back at that and that's gone. Like that Bitcoin is gone. I have nothing to show for that Bitcoin that I lost. 20 Bitcoin. I mean, today what is that worth? Like two point, some million, and it's all lost. So that's the plan to take your Bitcoin. So
100%.
just yeah,
Expensive
so
lessons.
yeah, and it's like you can keep learning it, or you can just it's tempting. It really is tempting, because you want to outperform the market, but and when things are going up, you just feel like it's going to always go up, but that's not the case. So just be
Yeah,
careful. Be careful
The
100%.
with
the
But
that.
whole
before we go to Eric, BTC Noah is another one of these 6'4" Bitcoin guys, which
To me, there seemed to be a odd amount, like oddly high number of 6'4" and up Bitcoin dudes that were
Yeah, both
muscular and
Tomer, I, and TC, we're all slightly above 6'4". So yeah, it's
yeah,
eerie.
you're right
Yeah,
up there.
Yeah.
I think
Yeah,
you mean
yeah.
four six.
Joe
You mean four
also. I'm
six.
I'm six. I'm 6'4.5", and I think Joe is what, like six. He's 6'4" also, right? It was like, and
Joe is
Pink.
7'1".
And Pink is what, 6'4" also, right?
Yeah, Pink's giant.
But
Yeah.
yeah,
Six
Noah,
four.
it's a good cautionary tale, and I feel bad. I'm so sorry that that happened to you. But like the saying of just not getting fancy with your Bitcoin, we just have this activity bias. We want to be the heroes of everything we do, and we sometimes just need to just sit and just say, I've done the hard part. I've learned about Bitcoin. Now I just need to secure it. I need to hang on to it and do everything I can to not let anyone else take my Bitcoin. It's a
Yeah.
hard lesson, man.
Yeah. And when the market's going up, you feel like a genius, until it turns around. you know.
Yeah, well, Lauren just DM'd me. He said I am a genius no matter what, but that
In
was
my
weird.
mind,
Yeah,
but we
he's
all know what that means.
yeah.
I think we have
That
Eric,
that means
correct?
in comparison to Lauren, and that's
Another
not
six
hard.
foot four guy. Listen to that. There's Matt right here. My goodness. Eric,
Uh,
another big, tall, strong, handsome Bitcoiner.
Well, not that
Eric.
tall. You guys are monsters. It was like being at a basketball convention. It's kind of fun. Yeah, guys, I think the thing here with make it clear, Cosmo's looking for an unsecured personal debt. That's fiat. Play with it if you like. I just having met you, Cosmo, you're so young. The last thing you want to do right now in a wealth accumulation stage is take on too much risk that you don't understand. I think that's a cautionary tale for everyone. And one thing I want to kind of throw out there with Terrence, with people looking to buy homes, if they have income, there is a wave of houses of people who grew out of their home, who are moving, who have 2.5% loans that are allowing assumable transactions to occur. So like one of my best friends here just moved. He has a 2.25 more. I'm thinking about, buying the house if somebody else doesn't, but you can assume these great mortgages, pay out the equity with Bitcoin and assume payments. So I would look into that, Terrence, and like I can give you the address here in Texas. But if they could assume a 2.25 interest rate loan, there's really no qualification for it. It's signing it over. It's a basic assignee. They buy out the equity with Bitcoin. They've got a beautiful home. They still have most of their Bitcoin and an affordable mortgage. I think that's a pathway to look at for your client as well.
I see T Swizzle's hand. Anyone else's hand up, Lauren? I think that's the only one.
Just mine.
Yeah, I don't think you're ever gonna like look back like in the future and be like, oh, it was a good financial decision to buy a house versus buying Bitcoin. Like it's always gonna look like it was a bad idea to buy the house in retrospect, like from a financial standpoint.
I just think psychologically, though, that's not a place we should ever go. It's like, Bitcoin
Yeah,
as the money is just an authentication
yeah, yeah,
token
yeah,
for
yeah. I
work
mean,
that we've done. Like, we need it for the goods and services that we want in the future.
I agree. But so like for my mental health, the whole play was sell my house, and I'm going to use a rough number, but sell my house and for 10 bitcoins profit. Wait a couple years, buy a house for 1 bitcoin, and I can live with parting with the 1 bitcoin mentally in my mental health because I owe my wife a house, obviously, and I was able to bank 9 bitcoins that I wouldn't have been able to bank otherwise. And so that's my whole thinking of everything I'm doing right now. Essentially, is that yeah, I'll still look back and be like, oh man, it wasn't worth buying a house again for that 1 bitcoin. But the flip side of that is I have 9 bitcoins that I wouldn't have had otherwise, and I can feel good about that.
Well, Taylor, I will tell you, sorry, I will ask this question my daughter, which I do not know, if she wants to have the house or if she wants to have a Bitcoin. Then I will answer your question to that, but she will appreciate more. I don't know
Taylor,
if she's
I
too
think
young to
I think
understand.
the context there was super important, and the context of your story is that you're still going to eventually get a house, right? So I applaud the plan, but to Terrence's point, it's like we need a place to live at some point. So I think it's a good plan, but I think that the detail that you just provided in the context, like that now makes sense versus just never having a house, right?
Well, that's right. That's right. I believe I mean, I want a house for my kids to grow up in, for us to make memories in, and for them to have a home base, and for us to, have a place for and stability in your life. And I think that's all important. And those are intangible benefits of having a house that are not financial considerations per se. And I think that's all fine. And but you have to make the financial decisions that are going to make sense in your circumstance, so that you can also provide those other things you need. Like in Cosmo's case, I have no idea what $100,000 is as a percentage of his net worth. You know what I mean? I don't know his circumstances. None of you know his circumstances, not really. And like for me, it's like, I mean, well, for someone, it's like, oh, 100,000, yeah, that's not a big risk to me. Like, sure, yeah, go for it, do the loan. I could always cover if I needed to. I mean, I think he's mentioned, oh, worst case, I still have my income I can cover, make the payments on. It's not the end of the world. And it may not be a big deal for him. For someone else listening here, it may be a big deal. Like, I want to do this too to be cool or something, and like to but it could be devastating if it doesn't work out. And so it really is all, you got to like exercise a lot of caution, and know your individual circumstances, know what percentage of your net worth it is, what percentage we're even talking about here, because 100 grand for someone who has 100 bitcoins, yeah, that's just not a big it's not a big deal if they want to go do that at all. You know what I mean?
Justin, how's it going?
Hey guys, remember the Dan Patrick Show? 6'5", 215 checking in right here. Anybody got the bell? Ding ding. Played shooting guard in high school and first base. Could hit for power, not for average. To me, it's an absolute no-brainer if you can leverage cheap, unsecured debt to buy Bitcoin. Like the only thing that matters to me is the sats I control and cold storage. And have like this cascade of Bitcoin principles, and I would never violate those. The whole Bitcoin maxi mantra. And the two that I struggled with reconciling were stay humble, stack sats, and that was at the top. Like I would never violate that. But now, above that, I have in a fiat economy, it pays to be a net debtor. So if inflation is eroding the real value of fixed rate debt over time, and Bitcoin is the best asset in history, the hardest money in history, then there's no way you're not you if you have access to cheap unsecured debt, that you're not using that to buy Bitcoin. And something that Eric said that I highly recommend, that my wife and I have been doing, she's not a Bitcoin maxi, but I keep showing her all those zeros at the end of the fiat price of our Bitcoin, and she likes that. So she has like no conviction and principles of Bitcoin or anything like that, but she likes the value of it, and we get to do whatever we want with our time all the time. But what we have been doing is any purchase, big or small, it comes down, and we'll talk about buying something, and every time we do, she's like, okay, I know what's going to come. Are we willing to sell Bitcoin to buy this? Because that's essentially, we're 100% in Bitcoin. That's essentially what we would be doing with any purchase. So man, it is incredibly satisfying if you're going to do some discretionary spending, and you just sit there and think about, am I willing right now to sell Bitcoin to do this? And the answer for us 99% of the time is nope, not willing to do that. Not willing to spend Bitcoin to do that. So um, that is so fun and satisfying when you do that. And then, a week or two later, you're like, we were thinking about buying that. Like we didn't even need that. So I recommend that too. You guys should think about anybody who's not doing that. Try it a time or two. You'll get hooked on it.
Yeah, well, that is definitely one of the big ideas, as we all know here. And it's great because it does incentivize us to be better stewards of the planet and not just consumerism. And we actually can save and build and plan. And but that's why we sometimes also have regret of spending too early. But if we can delay gratification and be responsible, yeah, I think that's just such a beautiful way. Hey, Taylor, I think you had your hand up first, but because Wicked is barely here, if you don't mind, let's jump to Wicked real quick, and then we'll come back
That's
to you.
fine. Mine's just continuing the convo, so that's fine. Yeah.
Wicked.
Hey guys, I don't know what's been discussed, but I'm wondering, has anyone put any like uh,
numbers around what they think would be an appropriate amount of total net worth in terms of Bitcoin to borrow the minimum from Strike. So the minimum, I think, in most cases is $10,000. And I think there's two different scenarios here for borrowing using the product. There's this like you're retired and you're now, borrowing. I mean, let's say you live in a very, very cheap area and it only costs you $10,000 a year to survive. Okay. So you're borrowing $10,000 every year and you just keep rolling the loans. So first year you borrow 10, second year you borrow 20, third year you borrow 30, and so on and so forth. For that type of strategy, um, what would you consider to be the minimum Bitcoin denominated net worth that that would be fairly mitigated from a risk perspective to start that strategy today? Because I have a number in my head. I don't know if anyone
Yeah,
wants to
I'm
talk about
interested in
this.
your number. I mean, we were just talking about this earlier. So we're talking about the difference between like an unsecured personal loan versus like some sort of Bitcoin collateral, right? And
Yeah.
Eric and I kind of were talking about how it's so early in the history of this product that at least for me at this point, and I know that Terrence has some clients that are looking to do this, but for me at this point, I'm like, I'd rather wait through a whole cycle, through another bear, through all the, the kind of mess that will ensue to decide whether or not I want to um, collateralize my Bitcoin for a loan because, anything can happen. But to the numbers, I'm sure Terrence could probably give a better.
Hey Cosmo, I think Wicked also mentioned twofold reason. I was curious of the second reason. I'm assuming it's tax purposes, but also I am also like Cosmo said. I also am curious what number you have in your head.
Yeah, so I kind of went through some worst case scenario math and I said, all right, let's say you started the strategy at the very peak of top of a bull run and we have this prolonged kind of unexpected bear market where the first year we get a 50% drawdown and the second year we get another 50% drawdown, so 75% total over the course of 2 years bear market after you've started this strategy. But because you don't want to sell any Bitcoin, you just continue to roll it and you continue doing the strategy, right? Um, Now the thing is at the end of that third year, when Bitcoin's dropped 75%, and if you're trying to maintain your LTV of zero point 0.5, you will have had to commit, um, let's say the starting amount was 2%, right? So like that $10,000 represented 2% of your stack. Okay, so you put in 4% for your collateral. By the end of year three, to keep that zero point 0.5 ratio, you will have had to commit 56%. So more than half your entire stack. So I mean, this is the danger, right? Even if you're starting at a very, very, very low amount with this strategy, like literally 2% of your stack. So in other words, you have 50x the loan value in your whole stack, and you've committed 4% of your stack as collateral to start out with. If you do that at the wrong time, the top of a bull, and then you get this unexpected prolonged bear market that has, a, like a decent 75% pullback. That's not even the worst we've seen, right? That would literally be the best we've ever seen. And even then, you would have to fucking put in 56% of your whole stack to keep that collateral at zero point 0.5, right? And not risk getting margin called. So, I mean this is so. Anyways, my absolute minimum um, would be 50x. So in other words, if we're talking about $10,000 loan, that means 5 Bitcoin minimum to even start fucking around with this idea, right? So if you don't have 5 Bitcoin, like you ain't ready, bro, for a $10,000 loan that you roll over forever.
That is some
Like
wild math. Is that the post that Justin put in the nest up there?
it's a different one. I'll find it. I'll post it in this as well. You can
Yeah,
go
that's a
through it.
little
It's
bit of a wake up call, Lauren. That's why I was telling you, if you just
yep.
cut back on your Zima consumption, you don't need a loan.
So
I
so that's I
heart
mean
Zima.
so that's one strategy. I mean, this is like the stack borrow die strategy. You never pay it back. You keep rolling it forever. And then like the nice thing about it is if you survive that initial cycle where things get crazy and you've put up half your Bitcoin as collateral, but you make it out on the other side, Then when the price recovers and then continues to go up from there, now your principal plus interest of your loan, which is getting larger and larger and larger, starts really getting compressed in terms of Bitcoin. So, the other part of this calculation that I did in this post, and again, I'll post it in the nest in a second. But I said, okay, let's presume there's this guy he's living off of 2% of his stack, right? Initially, and he's also going through this whole kind of worst case scenario bear market. But he remains retired. He keeps living off the stack. So it's 2% the first year, 4% the second year, 8% the third year, right? Because that was the bottom. And then it starts going back up after that. You can see the details when I post it. But then you compare that to the other person who's borrowing against indefinitely, never pays it back, but they just maintain the 0.5 LTV. By the end of 10 years with some assumptions, the first dude living off the stack spends about a quarter of his stack, right? So they're still doing great. They've lived 10 years. They've only spent a quarter of their stack, and now it's even cheaper to keep going. But then the second person who borrowed against it and never actually sold any Bitcoin has only been rolling their collateralized loan year after year. And by the way, this is assuming a 10% interest rate. That second person would only owe like 6% of their stack if they were to pay it off. But I mean, of course, at this point, they're just incentivized to keep rolling it. And then that amount they owe is actually going down year over year after that, because the principal itself is so large now that any increase in Bitcoin's value that's larger than 10% in a year is compressing the principal way, way more than the $10,000 that they're taking out in additional loan the next year, right? So you get to this inflection point where the principal plus interest is actually getting compressed year over year, more so than the additional amount you're taking out. And that's the real value of this strategy, is like a really long-term strategy. So now this leads into the question of, who can you trust as a lender for 10, 20, or 30 years, or 100 years? I mean, I don't know how long you're going to live, but right, like this, now this is the next question, and it's a very important question, because so far we haven't seen a single lender that has warranted a decade, 2 decade, 3 decade long um, trust, right? And I don't know if you want to be the guinea pig of like, okay, Strike seems trustworthy, but do you really trust them for 10, 20, 30 years to keep the strategy going? Or, are the, something funky going to go on over the next cycle or two?
Hey,
And
Hey,
is
then
it safe to
and then
Terrence.
you
say?
might lose more.
Is it?
Terrence, I think maybe Wicked came in right at the end of our space and opened up Pandora's box here. I think we could go for another hour,
Well, yeah,
but
Wicked, if you could wrap it up. I mean, I like
yeah,
this is
maybe
good,
we
and
can
people
carry it
can
over into
bookmark
tomorrow.
his post.
Yeah,
But yeah,
no,
we
it's good
do.
stuff.
We
I'll put the post in the nest. That's all I really wanted to say. But yeah, thanks for having me up. I'll put the post in the nest.
No, thanks, Wicked. That was awesome. I really appreciate that. Cosmo, I don't know if you needed to respond or we should go to Taylor, but we can also then go around the horn and close this out.
No, that was great. I feel like that I'm gonna look
Brilliant.
into that. Yeah, it's interesting. But yeah, let's hit the horn.
Well, Taylor, let's just start with you. We're closing out, so do not introduce a new subject.
Okay, I'll just comment on a couple of the comments that have been made, and then I'll wrap it up. The Wicked, I was going to say 10 Bitcoins, so I'm happy to hear that I'm even more averse to losing my Bitcoin than you are. 10 versus your 5. Justin, you said that the only thing you care about is how many sats you have at the end of the day. And I agree with that sentiment. That's where my mindset is. And I mean, I'm 100% in cold storage Bitcoin myself. But what I was going to say there, and I have moral qualms with this thought, but if I didn't, I would consider it. Well, I think of it as the burn the boats strategy, and that's where you go full on maxing out every credit card you can, take out every unsecured loan you can, just go balls to the wall, like as fast and furious as you can, and then you never make another payment again because you think the fiat system's going down, and you just don't care about your credit score anymore, because at the end of the day, you only care about how many sats you have in cold storage. And if you really believe You just burn the boats. You know, screw your credit score and do everything you can to get every sat that you can, and you burn the boats, and that's it. You're not looking back because you're not coming back. And I've thought quite a bit about that. I think that falls under, for me, thou shalt not steal, and so I do not go that route. But it's kind of justifiable in my mind when we live in a system of theft and you're being constantly stolen from. To steal it right back, it doesn't feel quite like stealing, but I have not acted on that, and I rest my case right there. Thanks, guys, for a great space.
Parenthetical Matt, how about you? And we haven't heard from you today.
Well, you guys were on a roll, so I didn't want to really disrupt the flow of things, you know.
But you came up on
But yeah,
stage
just
and
really
sat in
good.
a chair, and people are looking at you, so we need to hear from you.
I know, I know. Well, I was hoping to be able to contribute, but also sometimes you don't want to butt in and derail things, you know. So, anyways, I think it's a really interesting conversation. I'm kind of in the same camp as Cosmo, where like I've thought about this before and ultimately decided never to pull the trigger on it, just because I'm fairly risk averse and I like just sitting in cold storage sats because I know pretty much nothing can go wrong there compared to any other strategy where you start to try to get cute. And my whole goal is to have as many sats as possible in 10 years. And typically, the risk adjusted return for me, I don't know how to properly assess the risk because, to Wicked's point, we haven't seen any lenders that feel like, man, I'd really love to just park my Bitcoin with you for a decade. Like, there's not a single entity, period, that I feel comfortable doing that with. Therefore, I don't and won't. So I think that that's probably the biggest part of this whole conversation for me more than anything else. I think you can game it out from a math standpoint and make it look really appealing. But then it always just comes back to, at the end of the day, if it's a collateralized loan, at least you're trusting somebody else with at least one key to your stack and or to a part of your stack. And that to me is just almost too big of a hurdle to get over. So maybe things will change in the future. Maybe the terms will eventually get so enticing and it's a small enough percentage of my stack that I want to play with it. But then it just kind of comes back to sometimes things are too good to be true. So I don't know. I'll probably end up never doing any kind of leverage on my Bitcoin just because that's how I am.
Yeah, good
So
advice.
maybe the Cosmo option of taking a loan out in the fiat system that's not actually tied to your sats is a little more appealing. But anyways, not bringing up a new topic, but just wanted to say I threw something in the nest that might be interesting to some people. It's the math behind if you immediately aped a stimmy check into Bitcoin, where would that be today? So maybe just some perspective on this as well. It's a few posts back in the nest if y'all want to check it out.
Thanks, Matt. Wicked, I see you have your hand up. We're going around the horn with closing thoughts, so just no new subjects.
Okay. Well, no promises. I think Taylor, was that Taylor who went first? I dropped out for a second there, but Taylor, I think you said that you know you're more risk averse than I am because you said 10x versus my 5x. I actually said 50x.
No. 10. You said how many bitcoins do you think you need to start effing around with that?
Oh,
And I was
oh,
thinking
I
10
see. Okay,
bitcoins versus your 5
got it,
bitcoins.
got
So
it,
it came to.
got it. Oh, that's great then, right? So that'd be starting up with 1% of your stack. To start the strategy with, which I think would be pretty good. I mean, even then, putting up a quarter of your Bitcoin for collateral, kind of at the bottom of the bear, that'd be stressful. I think for me at least, I wouldn't like that one bit. One last thing I just wanted to mention because I know it came up, and then I know like okay, whatever. Here I'm gonna do it anyways. With the uncollateralized personal loans, I think that the key difference is just the limits that you can get. So like you won't be able to roll those for very long before you kind of max out all of your limits and before banks start saying, we're not going to loan you $1 million, bro. You know.
Ergo,
Whereas
brimstone.
if you got 10 Bitcoin and each one's worth $1 million, you could very easily get $1 million Bitcoin backed loan, right? Again, I wouldn't recommend it, but I'm just saying like that's the key difference here, and especially for OGs that have hundreds or thousands of Bitcoin. I mean, this pretty much opens up the avenue for them to get like these crazy loans, which they never had opportunities to get at fairly decent rates. So, anyways, that's last thing I say. Sorry for bringing it up last minute, but
No
thanks for
problems.
having me.
Your Honor, an apple with arms told me to do this. I don't know what went wrong. Hey, Wide Weapon, you're up.
All right, I know we're closing up, so actually, wondering if maybe one time you guys want to have like a a big macro space. Just like I'm a huge macro nerd. I got wiped out in 2018 with mining. I got like, I've learned along the way. I know the stuff. I'm not very well articulated when it comes to certain things of just getting my ideas out. But if there's a bunch of other guys that you want to get in a space and get a macro space going so we can talk over it, that'd be amazing. If not, then yeah, we'll just carry on.
How about you, Justin? Any closing thoughts for the day?
Terrence, I feel like we should confront the elephant in the room. The pictures you posted in Vegas of the two 6'4" good-looking Canadian guys at the bar drinking the Busch Light apples over ice with a straw. Are those real or are they are they photoshopped, Terrence? And who are those pink shirt guy and Lauren?
I'm not allowed to say who it is if their face is covered up, but it does look like Lauren there on his 17th drink, which is a typical day for him.
They are real.
16 and a
No
half.
no photoshopping. I can confirm.
They're real. Wow.
Okay,
Lauren is actually going to be hosting the next at the next Bitcoin conference. He's going to be having an arm wrestling tournament. I don't know if you guys have heard about this or not, but the winner gets to actually arm wrestle Lauren. So you guys should definitely
You
enter
got it
that.
wrong. It's actually, I'm hosting the mud wrestling. So I think that your wires are crossed there.
and we will screen the
There's
ultimate
no
arm wrestling movie starring Sylvester Stallone, Over the Top. Hemorrhoid, you're up. Any closing thoughts today, Hemorrhoid? I mean, sorry, Asteroid.
Yeah, take out as much unsecured home equity line of credit debt as you possibly can, and stack, 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 and let that shit roll. Let the good times roll. We're going up higher.
Pink Crop Top, you're up.
Proof of work, man. Do the work. Whatever strategy you want to exercise, do the work. Build your own conviction and execute with laser precision. Don't do anybody else's strategy. Do your own and then go crush it. Also, do what Asteroid said.
Eric.
No, it's all been said. Most of the people in the world who do things for money suck at their job. And if you're smart and intelligent, there's plenty of work out there for you to stack free and clear capital without worrying about debt. Use debt
Yep,
wisely.
Eric. But
It's a weapon to use.
then we have to actually expend effort. We want to minimize
I
that.
know.
Come
I
on,
know. No
man.
one wants to
Just
do
want to
that.
hang out
I,
at
I
my
will
house and do nothing. That's the dream, isn't it?
See, just
completely.
like
Completely, yeah. But I think the takeaway from me today is that I love when Wicked's on here because he says really funny stuff or really serious stuff while he's putting out laughing emojis, which I don't know why it makes me laugh, but it was cracking me up today. So it's good to have you on here, Wicked. Now, keep things simple in life, guys. Stack as much as you possibly can, guard it as tight as you can. It's not a real difficult challenge. If you have great debt, great leverage, use it at your own risk, at your own peril. If you're collateralizing. But until then, keep things simple, keep stacking, live a simple life.
let's go to you, BTC Noah, who says they lost 20 Bitcoin. Wink, wink.
Yeah, guys. Basically, just don't monkey around with your Bitcoin. It won't end well for you. That's it.
Hey, let's go to you. Did we hit everybody? We hit Cosmo and then
You
Lauren.
missed me, bro.
Well, you sort of started it, I thought. But let's go to you, Jesse. Sorry.
Yeah, no, I just this was a fascinating space for me. I'm just so appreciative of all the intelligent minds, pink shirt guy. I mean, really everybody. I don't need to name names. The whole crew up here is just
Lauren too, right? All the intelligent minds plus Lauren.
everyone
Okay.
everyone except
It's my experience. I've been told,
yeah.
right, Eric?
Yeah, Lauren, you're just no, I love you, Lauren. Um I had a couple takeaways. One is that this type of stuff is different for every single person. It's whatever your strategy is going to be, you have to be independent and think critically, as PSG was saying. The other thing is that time is a very important factor in a variable in this whole equation. And so I recommend that everyone looks at time very seriously and tries to understand how that affects this whole situation as the fiat world is crumbling and Bitcoin continues to appreciate as it gains adoption, and think about how that relates to your strategy. In my mind, as you go further out, let's say 10 years, 15 years, to me that gets extremely risky for the reason that Wicked was saying, right? We don't even have enough proof of concept yet for these businesses. That being said, um, I think it also relates to your stack, and back to Cosmo, your brilliant post that blew up in the thesis. It really got people thinking, including me. And, it's like I would much rather, in my case, take out a personal loan in the fiat and not worry about leveraging Bitcoin. But if you're someone that's holding a ton of Bitcoin, I do think it makes some sense to play with these instruments and see what happens. And Wicked, the math you just put forth was pretty epic. So clearly, you want to have a large stack if you're risk averse at all, because it could get ugly. So just really appreciative of everybody. I learned so much today. Love everybody from the community, and hope everybody has a good day.
Lauren, let's go to you, and then we'll close out with Cosmonaut since his post spurred this whole discussion today.
Yeah, it feels like maybe we'll get some overflow into tomorrow even. I think it's all about love, and that's why I'm here. Jesse mentioned time, and we were really made aware of time when one of the fellas that we all had dinner with, I got to know, had a pretty in-depth conversation with last Tuesday night. His life ended, and it just really makes you realize how precious time is. And one of the things that I learned at the right around the time of the photo that we referenced earlier was taken was from Pink Shirt Guy. Was I've always thought that freedom was truly to do what you want to do with your time when you want to do it. But Pink Shirt Guy helped me realize that it's actually about purposeful living as well. It's about what you're supposed to do with your time. It's about what Eric does 3 days a week when he's training his son in the boxing ring. It's about what you're supposed to do with those people closest to you. And all of these things are important. We're all different. We're all at different ages and stages in life. And some of the things that people in this group might scorn you for, like, oh, you shouldn't screw around with that. But it's like the guy that came in our space and said everything is a layer two, even your mom. Like that made me laugh. But it also like everything's a shit coin, your chairs and everything else. But in reality, we still need a fiat kind of income in order to live. So some of these products for some of these people are the ability to pay their rent or their mortgage. They're the ability to provide food for their families. And so to me, it's like I see some of these things as just being a fiat job instead of actually going in and trading your time and energy for fiat. You're actually manipulating these other products in order to do the same thing. So to me, yeah, they're all shit coins, blah blah blah, but let's not judge one another because we're all at different places. I don't have a job right now, but I need to do some of these things in order to provide. So for me, it's about love. Ultimately, that's what my journey in Bitcoin is. And I think this is the best tool for love going forward. So, I'll just end it there and crash land the plane and hand it over to Cosmo.
Lauren, I thought you said you did have a job. You had alimony for your 5 ex-wives, no?
Man, Terrence, so often I say things to you in private that you just go and throw me under the bus time and time again. I'm going to have to stop sharing things with you. You've
That
just
was my inside voice. Sorry.
hurt a little bit of our trust. Ouch. And it was, yeah, well, four of them, 4 out of the 5, yes.
Cosmo.
Yeah, I mean, after yesterday, I actually decided I just wasn't going to work that day, and I was going to spend the time with my wife and my dog, and it was honestly one of the better days that I've had, and I really got to spend time and enjoy their company. And so, on top of, we talk about production and giving back and all this kind of stuff, but it's also good to take a day and just be a person, be human, experience humanity in a very real way that involves those relationships. I see a bunch of people that are trying to get up on stage. They were in the comments on that post, and maybe come by tomorrow. We'll chat about it again. If you have, any thoughts and you want to just chat with me, my DMs are open. I like chatting with people. I think a lot of this conversation just stemmed from a couple of interviews that I saw and some thoughts about, and a conversation I had about diversification with a friend of mine because they're talking, you got to diversify, you got to have, but really, like people who are experts or people who do well, very, very successful people are people who pick one thing, they understand it they understand every single facet about it, and they go all in on it, right? So, like, you know, I've an older friend who is in construction, and that's just what he's always done. And even his portfolio, his retirement portfolio, everything he invests in centers around construction and real estate because that's what he understands and that's what he knows, right? And so, I think that in a more broad sense, us in this space, I was thinking like, look, if I understand this super well and I have conviction in this, what's to stop me from taking out some smart leverage and shorting the fiat system and longing Bitcoin? And I think that, you know, I still haven't made a decision on if I'm going to do this just because it's a big step and um just in terms of like debt because I don't like it. I genuinely don't like it, but it makes sense to me. So
If you have second thoughts, maybe you shouldn't do it. Sounds like you don't like that.
no, it's not that I have second. It's not that I'm. Here's the thing: is I can make it work. It's just having it right, and so it
Yeah,
wouldn't.
I
It
feel like if
really
you have any
wouldn't be.
reservation about that, it's probably not.
Well, well, no. But the point I'm trying to make is that it's not about a burden, right? It's not about a burden. It's just a principle, right? So, I think that we'll continue this conversation later. But yeah, thanks for everyone who chipped in. I feel like there was a lot of good things that I probably didn't completely think through on a lot of this stuff, and it was awesome conversation, you guys. But yeah, I'll hand it over to Terrence.
Yeah, let's continue this conversation tomorrow. I think this is really good because of where we are and where we are on the Bitcoin journey. This topic's gonna continue to surface over and over and over. You know, what amount of Bitcoin do we spend? How much do we collateralize I lend against, if at all? You know, what are the different options? And because we are incentivized to save and plan and build and think long term, we just want to make sure we're making the right decisions. So I think these are healthy discussions for all of us. And just remember, it's Bitcoin and Bitcoin only, because otherwise you will experience a rug pull.